Good morning. Happy Halloween, everybody. Welcome to the education room. Play that funky music, white boy. You were a DJ in the 80s, Ron? I believe that. That's a good one. I love it. Welcome to the education room, ladies and gentlemen. Did you like that one, Gary? That was a fun one. You know what that trade was? And guys, I'll show you what trade he's talking about because I'm not going to lie. I'll brag a little bit. So there's this idea that you have to trust your plan. There's this idea that you have to believe that your rules provide an advantage. You have to believe that what you're doing is what you should be doing. And guys, there's this point where you practice a plan. There's this point where you see these patterns. There's this point where you've done the same thing so many times that fear begins to leave the equation. That the only way you're ever going to let them stop you out is if they break beyond your boundaries, not their boundaries, your boundaries. And that's what we do in this room, guys. I give you something to trust each and every morning. We talk about one trade, renegade, maybe. We talk about one trade, guys. Every morning we talk about one trade. We talk about a set of rules to enter. We talk about a very basic management plan. And I'm going to tell you, if you don't trust your plan, you're going to spin your wheels. If you don't believe in your rules, you're going to spin your wheels, guys. So one of the things that I want you to think about this morning as you trade, as you learn, as you study, is we're building trust. We're developing trust. We're establishing trust in a methodology that has been proven to win more than it loses. And I'm telling you, I've been working with people for 5 years. For 5 years. And if you ask somebody point blank, does your plan win more than it loses? Most people can't tell you yes because they don't know, because they didn't do the work. And that was that funny little video that I put in. The don't want to do the work today, because that's what it's like in my classroom a lot. Guys, every morning we look for news. Ed, you say only when you follow it. So have you ever asked yourself why you don't follow it? I mean, have you ever really just sat down and said, why don't I follow my rules? It's because I'm afraid that the next trade's not coming. And that's when I don't follow my rules. I feel like I have to get paid right then. Because if I don't get paid right then, I may never, ever, ever get another trade. The futures markets might close. And guys, I'll be living under a bridge eating beans with a stick. And that's no way to be. So because I trust my plan, I'm okay not being in the market when my rules aren't met. And that's where you'll get, and that's the goal. Yeah, Ed, I definitely am. Sometimes it's not even that I'm smarter, but I want people to think I'm smarter. So if I break my rules and make money and I show that trade, man, everybody's going to be so proud of me. Put me up on a pedestal. And that's no way to trade. So guys, the first advantage that I give myself, and everything that I do revolves around advantages, is I come and check news. What's going on in the market that could upset it? What's going on in the market that could make it spike or change direction? And that's high impact, medium impact news, guys. And we had a lot of high impact at 8:30. I don't know what it did. Didn't really check it out. And then at 9:45, we have the medium, the Chicago PMI. So at 9:45, 9:43, my plan says, don't be in a position, Mark. This may create a spike. And my plan says, wait for the market to get back to like a normal pace before you try to trade. And that's all. That's the only way I use news. I don't look at what it is. I don't click on these boxes to see what it means to me. My desire to know news revolves around nothing but the date, the time, and whether or not I see high impact or medium impact, guys. I don't have to overthink it. I don't make my decisions. I do not make my decisions on news. I make my decisions on patterns that have been proven to win more than they lose. Good morning, Nanda. Nice to see you. And Nanda, I've noticed that I change your name every time I say it. You have been Nanda and Nanda. So over and over. One of them I apologize for because I'm unsure. Guys, everything that I'm going to talk about today, true story, it's all going to come from the Nexgen page. I'm not going to withhold information. I'm not going to charge you another $100 to be smarter. Guys, all I'm going to do is I'm going to help you learn a pattern. I'm going to help you learn one pattern for one trade. And that trade, let me go to the glossary of common terms. I want a glossary of uncommon terms. I think that would be even cooler. But guys, I'm going to talk about ad nauseum. I don't even know what that means, but I know that it means a lot, right? High probability trade. A high probability trade is defined when each indicator on every chart agrees for the rules for the trade. This is the best of the best, guys. This is when all the triggers are their strongest, when no termination conditions exist, and there's no trouble spots between your entry and your target. Guys, this is a trade in the form of the high probability trend trade that gets taught every morning. This is a trade that typically wins 70 to 80% of the time. This is a trade that creates an enormous amount of confidence, because when you win that much, confidence is a byproduct of success, guys. And this is a trade, more importantly, most importantly, that teaches you to read your indicators. Because the one truth, there's probably 50 truths, but this is the one that I think is the most important. 90% of your day, each and every day, is going to be spent reading your indicators. 10% of your day will actually be trading. 90% of your days will be waiting for that advantage of momentum, and when it's not there, you're going to choose to sit on your hands. And 90% of your day will be waiting to couple that momentum with a clear path, and if it's not there, you're going to learn to trust that it's better to sit on your hands. And then 90% of your day, even when those rules are met, are going to be waiting for the correct entry. And if it's not present, you can say to yourself, man, I don't think I'm going to enter this trade. My advantages aren't there, guys. And that's everything you should be doing. And I'm working with a gentleman right now, and I want you to try this. If you're struggling with something, I want you to learn to speak outside to your, outside voice. And I want you to revolve loud in front of your computer whether or not you have the advantages that you need to take a trade. And we'll delve into that a little bit more. And this is something that's worked for me, so I'm going to give it to you guys. Maybe you can try it if you're struggling with something. But guys, this 90% of the day is hanging out waiting. The 10% of your day is actually trading because you have a statistical advantage, because you see a pattern that has been proven to win more than it loses, because you've studied that pattern. You validated, you verified it, and you know with no uncertain terms that if you take this pattern 10 times in a row, you're going to win more of them than you don't. And guys, that's what we teach each and every morning. And to do it, where's my little, hold on. I'm talking to myself there. We do it through the high probability trend trade. We're going to take the first hour of this class to learn to read your indicators, to talk about advantages, to be able to identify them, to learn how to study them. In the second half of the classroom, hey, good morning, Elvis. Absolutely it is. I've got it going on YouTube. Good morning, Steve. Guys, the second half of class, or the second 2/3 of class, will revolve around you showing me how you're reading your indicators, telling me what you see, what you're thinking, why you did what you did. Because my job is to help you read these indicators. So it's going to be a little give and take, but feedback is one of the things that's going to steer you in the correct direction. I'd love to, Elvis. Guys, we're going to talk about one trade. And this one trade has 3 rules. That's it. Your first rule is going to provide you the advantage of momentum. Let's see if we can help James. Hold on, guys. We're going to take a quick pause and see if we can't get James some ears here. Boom, boom, boom. Is anyone else in a great mood today? Oh my gosh, I'm in a great mood today. right. So we got James going. He'll be all right. As each of these rules provides an advantage. Rule number 1, strong triggers, gives me the advantage of momentum. Rule number 2, no termination conditions, gives me the advantage of a clear path. Rule number 3 is going to have me pinpointing exactly where the market is most likely to continue, and that rule puts me into a trade right at the best of the best spot with the least amount of risk, with the most amount of profit potential. These 3 rules that we're going to talk about happen on only 2 charts. 3 rules, 2 charts. I can't make it any more basic than this, guys. I can't make it any easier. I can't make it any less confusing than 3 rules on 2 charts. Here's the challenge. You're going to try to make it more confusing. You're going to add market flow charts. You're going to add market flow charts to the charts that don't even need market flow charts. You know I'm talking to. You're going to add higher time frames, lower time frames. You're going to try to fight trends. You're going to try to be the first one in. Guys, I'm telling you right now, focus on this one trade with 3 rules. Learn to read your indicators, and the rest of the opportunities will present themselves. The first chart is the large chart, guys. The large chart leads the way. It's a very slow-moving chart. It's a very broad stroke of a brush. 1 bar, the first bar on the large chart, is going to define the direction, the momentum, and the areas of the market, guys. Rules 1 and 2 must be met on the large chart. You must have strong trigger lines and that advantage of momentum, and you must not have anything in the way, guys, and that's going to give you the clear path through rule number 2. Here's what you need to do. If your rules are met, you're going to turn your attention to a smaller, faster chart. It's a refinement chart. This is a chart that's going to pinpoint exactly where the market is most likely to continue and allow you to take an entry with the least possible amount of risk. This refinement chart takes that 1 bar from the large chart, that single bar that's defining all of those things for you, and it's refining it. Where's my picture? So inside of 1 bar on a large chart, guys, there's an entire retracement, that push up when everything says down. There's areas, and they're inside of triggers, guys, and you're going to pinpoint precisely where the market is most likely to continue with the overall trend, with the overall direction, with the overall momentum. And that's really kind of what makes this trade so amazing. It's very precise, it's very high probability, it's very low risk, but what it does is it teaches you to recognize momentum. It teaches you to understand clear path, and you begin to understand where the market is most likely to continue, and you're going to use that for your entry. We use only 2 charts in the beginning because it's simple. And if you remind yourself that the large chart leads the way, if you remind yourself that the large chart is the large crowd, these are the men and women, these are the movers and shakers, these are the influential, the deep pockets, these are the people that establish trends. These are the people that create that momentum. And most importantly, I think, these are the people that react at those key areas. They're gonna buy, they're gonna sell, they're gonna fight, they're gonna reverse the market right at these key areas. You can see exactly what they're doing, and you can see exactly where they're most likely to do it, guys. And this is what creates this huge advantage. Over here on your small chart, guys, this is their small crowd. These are the people that have to be smart, or these are the people that feel compelled to fight. These are the people that need to be first, guys. And they create those little retracements. They have enough behind them to make something happen, but they fail 78 to 80% of the time, which means you have the potential to win 70 to 80% of the time because you're using that small chart to know exactly where the small crowd is most likely to fail, guys. And that's the precision that comes from this highest probability trend trade. So we're going to do what we do every day, guys, and this is really just tested and true at this point. We're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade. It says when it's okay to trade because you should really give yourself 2 options, guys. Either your rules are met, it's time to take a trade, there's a statistical advantage, or my rules aren't met. I need to sit on my hands and do nothing and wait for that advantage to present itself. The difference between the most successful traders I know and the ones that struggle are the ones that do nothing when there's nothing to do, find success, And the ones that feel compelled to make something happen, the only thing they make happen typically is a loser. So we're going to learn rules. We're going to break them down. I'm going to teach you how to study them. I'm going to give you every tool that you need to be successful. You're going to practice. You're going to simulate. You're going to make mistakes. I want you to make mistakes. You're going to break rules. That's okay, because you're going to write those rules on the chart, and you're going to begin to understand what they look like, how you broke them, why you broke them, and what it meant to you to break them. Guys, post your pictures in the class. This is the first step to becoming confident. Say, hey, Mark, this is what I did. This is what I saw. This is where I entered. And this is where I exited. Mark, my goal right now is to become a chart reader, so let me tell you what my chart read was. In every trade that you present in class with this information on it, I'm going to go back to it, and I'm going to do my chart read on it. I'm going to talk about what I saw with momentum, what I saw with a clear path, what I saw with an entry area. And I'm going to tell you right now, you're going to feel compelled to argue with me. I'm going to respectfully request that you do not. If you disagree with what I'm saying, guys, we'll go back to the very basic lessons, and I'll state my case and you state yours. We'll do it respectfully. But resist the urge to tell me, but Mark, I made money. But Mark, I made money, and don't tell me your rules. But Mark, I got paid. Because guys, one of the things you want to do is you want to work your way towards practicing the correct rules, because the correct rules have been proven to win more than they lose. Elvis, looking right at you, buddy. Because when you practice the wrong trades, when you get in at the wrong point, when you get lucky, guys, it's a short-term victory and it feels good. It really does. The dopamine goes full tilt. But it's a long-term failure, because when you're avoiding patterns and you're fighting things, guys, it's almost like Murphy's Law. The second you go live, all that luck runs out. So we're going to focus on trading the correct rules, but give yourself a little grace. As you're brand new, be comfortable breaking the rules a little bit, but learn from it. Post in the room. Tell me what you see. Let's move forward from that point. I'm going to simplify. I'm going to keep it. Me too, Ed. I'm going to keep it one trade initially. We're going to talk about the high probability trend trade, guys. We're going to focus on the rules individually. We're going to break it down. I'm going to show you how to study it. I'm going to give you all the tools you need. And you have to know what looks you're going to commit to. What's it look like when you have a statistical advantage? What's it look like when there's momentum, a clear path, and an entry area, guys? And you've got to learn these so they become easy. That's the second part to becoming a confident trader ASAP. You have to track this stuff in a spreadsheet. You have to go back and study it as well. And guys, this is why I presented this video. And I don't know if you can hear it. Go watch it. Cracks me up. But 90% of the people I work with don't want to do the work. They don't want to learn the looks. They just want to get paid. They don't want to do the study. They just want to get paid. They don't want to learn the process. They just want to get paid. Guys, and those people spin their wheels for a really long time, is my experience. So you guys post, and then let's use this spreadsheet. The spreadsheet has 5 tabs on it now, guys. I updated it because I wanted to give you a very clear picture of how to use it most effectively. And that's using the first tab as your trade journal. Every trade that you take, guys, win, lose, or draw, every time you enter the market, you should take it, you should drop it in this trade tracking sheet, guys. You should annotate your chart. This is what I saw. This is what it meant to me. This is where I entered. This is where I exited. And guys, track it each and every day. And then there's a section that says feedback from class. Because if you present a chart and everything is perfect, the feedback's gonna be like, oh my gosh, this is your look. Don't miss this look. This is the best of the best. You're learning what it looks like to have the advantage. But if there's a challenge, maybe you take one of those 50-50 trades and I say, hey, that's not from a good top. You got to manage these aggressively. Then you have a notes section. And what you're going to do tomorrow is you're going to go back and look at those trades. Guys, if you really want to move forward, you got to look backwards. What did I do yesterday that worked? What did I do yesterday that didn't work? What felt easy? What kept me relaxed? What felt forced? What made me nervous? Guys, when you break your rules, you feel nervous. And when you feel nervous, you move your stops arbitrarily. and those stops get hit, and then the market does exactly what you thought it was going to do, and then you get pissed off and you start revenge trading. So go back and learn these patterns, guys, and this is one of my promises to you. Once I get about 5, 6, 7 charts from you with annotations on your chart reads, I'm going to recognize your thing. I'm going to recognize what it is that you do that creates challenges for you. I'm going to recognize what it is that you do that that's bringing you success, and we're going to work for it, right, Ed? Sometimes that's very depressing. It's true. But Ed, every chart you post in this room, the one thing I can tell you is that every time you have momentum and a clear path, you find yourself victorious. Every time you trade into areas, you lose more than you win. And every time you don't wait for the perfect setup, you stop yourself out of trades before you give them a chance to run. You should write that down. You should focus on that in the morning and say, these are the key elements that I'm going to try to avoid today. Or you can wake up and say, you know what, F it, I'm going to try to make money. But guys, this brief historical study, it's going to set you up for the day. And the more you post in the room, the quicker we're going to get to the underlying problems of why you're not successful yet. The 101 tab. The 101 tab is each rule for the high probability trend trade broken down. Strong triggers, clear path, entry. It's also exactly what it looks like to be void of those advantages. Weak triggers, termination conditions. Your job is to learn these looks so that you can identify them quickly. Is that what I say? I'm not sure what you're saying, Elvis. Do I say F it when I'm trading? No. I say, are my rules met? And if they're not, then I say F it, I'm not going to get in the market. Guys, you got to learn these. I'm not sure what you're talking about, Elvis. If I offended you, I apologize. I don't think I said F it. Strong triggers, clear path, entries. Learn it. Once you learn it, it becomes easy. Once it's easy, the market slows down for you. Understand the opposite side of the coin, though. Understand when your advantages are gone, when you have to exercise that 90%, guys. There's a whole section called client trades, and this is where you guys have been brilliant with the software. This is where you've taken momentum and clear paths, where you've defined entry areas, where you've presented them in the class for feedback, and they were so spectacular that I dropped them into the spreadsheet for everybody to study, guys. There's an entry sequence short, there's an entry sequence long for the high probability trend trade. There's the absolute most mechanical approach to taking these trades as a brand new user that focuses on minimizing risk and maximizing your ability to get paid. And then there's a whole section down here where you can begin to build your management plan a little bit. Maybe hold for bigger moves. Maybe understand patterns that are robbing you of the bigger moves. There's patterns that repeat themselves every day, guys. We trade them for entries, but you're also going to begin to recognize them. Some of them help, some of them hurt. But as you get better at momentum, clear path, and entry, guys, these present themselves without you even knowing it. Start taking pictures of things that look familiar. And there's a whole section dedicated to termination conditions, guys, because this is the most broken rule. Awesome. Elvis, I'll go back and look at it. I'll put a note on my screen for 9:20 to see what the heck I said that was so good to you. And I'll try to repeat it, because if I can make you smile, that makes me smile. That's one of my favorite things to do, is make you guys happy. And guys, the final tab is your favorite looks. This is where, as you begin to develop a plan, initially it might just be the high probability trend trade. Never miss this setup. And if you click on that link, you're going to see momentum and clear path and the perfect entry. And then as you grow, you may begin to look for other trades. And this is a great way for you to grow outside of that first trade, because you're reading your indicators. You're going to begin to craft your own management plan. You're going to start to see things. And you're still going to want to avoid those termination conditions, guys. So this spreadsheet, I dropped it in the room just a minute ago. I actually dropped it twice because I wasn't scrolled through. That's the second half. So post in the room, ask a million questions. Ask a million questions. But guys, ask your questions on charts. Ask your questions on annotated charts. Mark, I saw strong triggers. Did I read it right? Hey, Mark, what are these yellow dots right here? Mark, this is where I entered. This is where I took half my profits off. This is where I added back on because the rules were still met. And then I took profits right here at the trouble spot. Hey, Mark, how did I do? Was my chart read correct? Is there anything that I could do better? Could I have reduced my risk? Could I have maximized my profit potential? And guys, I will answer each and every one of those questions if you post in the room. If you choose not to tell me what you read, if you choose not to tell me your chart read, guys, I may choose to go, hey, nice trade, and then go to the next one. Because there's got to be educational value in this room. The other room, the trader's chat room, that's my, hey, look at me, how great I can dance. That's what that room's for. This room is education, guys, so stick to the education. And we're going to do that. We're going to focus on 3 rules, guys. I'm going to keep it so stinking simple for you. Don't complicate it. One of my favorite little conversations with Elon Musk once is he was talking to a reporter, and he was talking about how engineers, no offense engineers, how engineers will give their everything to try to, what's the word I'm looking for? To make something better that shouldn't have existed in the first place. And that's what a lot of people do with Nexgen. If 3 rules is great, well, if I have 5 rules, I'm probably going to be more successful. If 2 rules is what he says it takes, imagine how much smarter I could be with 3, 4, 5, 6, 7, 8, 9, 10 time frames. Guys, too many minds. Keep it simple. The first rule, strong triggers. Why? Because it gives us momentum. Guys, strong triggers happen with the trend. So let your large chart define trend. If the background is green, the market's going up. Let's look for rules to be met for high probability trend trades long. If the background is red, the market's going down. Let's look for high probability trend trade short rules being met. Notice that I didn't say the background's green, let's go up. We're still waiting for the rules. The rules create an advantage, guys. When my trend is up, in order to have strong triggers, my small triggers are green, my large triggers are green, and my background is green, and all the colors match, guys. And there's really no way to have strong triggers if these colors don't match, and that's because when the small triggers break above the large, it paints the background green. So when these are green and those are green, and the scissors open, guys, when there is space created between the small and the large, everybody's run with scissors, right? Look at that. They're open. I can cut. I can get work done when my scissors are open. Guys, this is strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up. Odds favorable momentum is a phrase that you're going to hear in this room every day, guys. Odds favorable momentum comes from strong triggers. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum gives these areas the potential to break, and that momentum can break areas, guys. And really, most importantly, odds favorable momentum, it can cover some of the mistakes that we tend to make as new users. Maybe we accidentally traded into a line. Sometimes odds favorable momentum buys us a little bit of time. In a downtrend, when the background is red, the background turns red because the small triggers break below the large. Strong triggers means that the smalls are not only below the large, but they're wide, they're angled in the direction of the trend. And it's the space between the two, guys. Picture scissors open. You can cut. You can get work done. Scissors don't work when they're closed. This is odds favorable momentum. The odds are favorable for the market to continue down. And guys, same look, can break areas, can cover mistakes. And when I have strong triggers up or down, this is the best of the best time to buy that pullback at Fibonacci support for a long trade, or to sell that pullback at Fibonacci resistance for a short trade. On your large, slow-moving chart, you're going to see these tails sometimes when the rules are met. And these tails are that refinement process on a small chart. You're going to be able to pinpoint exactly where these tails are most likely to form when the rules are met. And guys, you're going to be able to use these tails for a study tool as you begin to develop trust in the methodology. So, strong triggers leads the way. Let's see, just for grins, if we can identify it without actually having to take a trade. This is my most current bar on the S&P. My background is red, therefore the trend is down. My small triggers are below the large triggers. The large triggers are wide. There's space between the two. Can you give me a why in the room if you recognize that right now in the moment we have a market with the potential to continue in that downtrend? that we have strong triggers, we have the advantage of momentum. And guys, there it goes. This is it. That's rule number one. This is what it looks like in the moment. And it's probably not a coincidence that the market continues to push down. It's probably not a coincidence that it made it through that fib. So guys, this is rule number one. There's rule number one, met the other direction. The most current bar gives me that advantage, guys. And once you begin to believe in that one, you begin to look for it. You crave it. This is the look that I want if I'm going to get into a trade. And when the scissors close, guys, and when those small triggers work their way back inside of the large triggers, we call this a weakening of the large triggers. And when I weaken large triggers, check it out. The scissors close. Guys, with closed scissors, the best you can do is take a stab at it, right? Weak triggers, anything can happen up or down. This is where retracements happen, guys. This is where key Fibonacci areas tend to hold. And if you learn the difference between strong and weak, let's take a picture just for grins, just for giggles. This was weakness, and the market retraced. And this was weakness. And look at that. The smalls were on the wrong side. And guys, this is where that reversal happened. Pretty cool, right? And guess what? A lot of you may have found an entry right here at the bottom of that tail. So strength, weakness, odds favorable, anything can happen. Guys, this is exactly what we look for every day. That's rule number one being met. There are people in this room that have plans that is based almost solely around momentum. You're going to see it today. Learn to believe in it. Once you have it, you have to make sure that you have a clear path. You have to make sure that there's room to your targets, guys. And clear path means that there are no termination conditions. Termination conditions are Fibonacci-based indicators, guys, that can stop the market, that can reverse the market, that can create untradeable bounces. These are the horizontal lines on your large chart. Horizontal lines on your large chart are where decisions are being made by the large crowd. That's how I want you to think of it. Horizontal lines on the large chart are where the people that buy and sell, that create trends, that establish momentum, this is where they are making decisions, guys. And one of the best things you can do is not get caught up in their decision-making process. So, lines on a large chart. We're going to look for divergence high lines and divergence low lines. Divergence is when the market goes up and down, it creates a pivot. When the market goes down and up, it creates a pivot. If if momentum is not following price, and this is a calculation that your software will run in the background, that calculation finishes 2.5 bars down, that calculation finishes 2.5 bars up. It's going to create a magenta line from a high, letting you know that the momentum was slowed, and it's going to create a cyan line from a low. We're going to use these lines to determine where the market may stop, way bounce. Elvis, you understand horizontal? Lines that run along the horizon, 90 degrees to vertical. I want to make sure that you understand horizontal. Not everybody understands the phrase. No, it's not just fib lines. Elvis, please. Divergence is not a fib line. Yellow 1-to-1s are not a fib line. Ladies and gentlemen, it is horizontal lines, divergence highs and lows, resistance and support, yellow 1-to-1s. These are the horizontal lines. These are the areas on a large chart that may stop the market. And you're going to use those T3 trigger lines to determine whether or not that's the case. And Nanda, there are 3 time frames worth of fibs that are placed on the large chart. That's why there are different thicknesses, and that's why some work their way all the way off to the right. So what we've done to give you the absolute most, the absolute best of the best accuracy, is you're going to have these lines that print all the way to the right into the distance. And these are the native Fibonacci areas to your 13-2 chart, your large chart. These really skinny lines that seem to stop right where the colors stop, these are from a 5-1, and the really fat ones are from an even higher time frame, a 21-3. Each and every line on the large chart has exactly the same weight. Each and every line is equally as important. One is not more important than the other. One doesn't create a higher probability than the other, guys. Each of these lines are very capable of stopping the market. Each of these lines are very capable of creating a reversal or a fight. So what we're going to do to determine whether or not it's a termination condition is we're going to allow price to reach that area. We're going to let the dynamic Renko bars come up and hit Fibonacci resistance, or we're going to let those dynamic Renko bars trade down and reach Fibonacci support. And once they reach Fibonacci support or resistance, I want you to say to yourself, this is where the large crowd may make decisions. This is where they may choose to exit, where they may choose to enter. This is where buyers and sellers may fight. You'll never know. You'll never know what the reaction is going to be. But if price reaches Fibonacci resistance, and it could be that divergence high line, it could be yellow 1-to-1s, it could be red Fibonacci resistance, and your trigger lines remain below resistance. So price reaches, where are my triggers? That's it. 4 words is all you need to identify termination conditions. If the trigger lines remain below resistance, resistance may reverse the market. If your trigger lines remain below resistance, resistance may create an untradeable bounce that takes you out of any long position. If they remain below resistance, guys, there may be a fight between buyers and sellers right at that area. If this area of resistance reverses the market, the large triggers pinch roll, go from green to red, we're going to call this a strong top. And a strong top means that not only did the large crowd get to this key area, the decision made by the opposing force was so impactful that it reversed the market. This strong top or this strong bottom is the precursor to the highest probability trend trade that you can take. This strong top or bottom sets you up to go the other direction, and there's a lot of trades that are associated with this no triggers through look. Price comes to support, it reaches Fibonacci support. Guys, all I have to do is ask myself, where are my triggers? If the triggers remain above, it may reverse the market. If the triggers remain above, there could be a bounce. Good morning, Cab. Nice to see you in here. If the triggers remain above, hell, there might be a fight for a while. I don't know what's going to happen. But as long as the triggers remain above support, no trades into that area. My rules aren't met. And guys, termination conditions are the most broken rule. Termination conditions are that thing that you should study, because termination conditions create bounces. Termination conditions allow you to identify where the market may turn. Termination conditions can very often identify consolidation and keep you out of a market that has the inability to continue in the direction of the trend. So, price reaches an area, no triggers through. Let's sit on our hands. Guys, give me a Y if you can hear me, please. Cool. There we go. Audio's on. So guys, if you ever don't hear me, make sure that you post in the room. Hey, Mark, I can't hear you. And then I'll ask the entire classroom. And if you see a flood of Y's coming through, it means that I'm good on my end. And you may need to reboot. You may need to do something, check your settings. But it's not coming from me. Mike, I disagree. Trade your rules. If you choose not to, that's great. But never trade, that's an absolute. Hell, my rules are met. I'm taking the trade. I'll take a loser because patterns have been proven to win more than they lose. Some people will put that in their plan, though. Areas break. Areas break to the downside. Areas break to the upside. Fibs get smashed, guys. Most often they get smashed with odds favorable momentum. But if price reaches this support and my triggers remain above, my job is to sit on my hands and wait for the reaction. My job is to see what that large crowd has in store. Sometimes there's no resistance at all. And everything breaks, guys. And we consider an area broken. The path is clear once both the small triggers and the large triggers get below an area of support, or once the small triggers and the large triggers get above get above the area of resistance, guys. And that is the only way that an area is ever considered broken, when both the small and the large break it. Until that happens, guys, you do not have a clear path. But what you'll find is once they break, support very often behaves as resistance, and resistance very often behaves as support. And once you have that clear path, once the trigger's clear, your path remains clear until you reach the next area. So I'm going to ask real quick, is everybody good? If price reaches and the triggers remain below resistance and above support, you give yourself permission to do absolutely nothing because you have no idea what the reaction is going to be. And if both the small and the large clear the area, you have a clear path until you reach the next area. Look for your rules to be met. Look for that opportunity to maybe sell Fibonacci resistance and go with the trend. And guys, once you understand those two very basic concepts, once you can go back and look at your large chart and say, hey, I either have a clear path or it's a termination condition, you open yourself up for the second trade. And this is the second trade on the plan that I'm going to give you this morning. Because momentum can break areas, guys. And your trigger lines will show you that potential. So when your small triggers break through that area of support, but your large triggers lag behind a little bit, guys. 50% of my triggers are through the area, 50% are above. With that odds favorable momentum, and only with that odds favorable momentum, we call this a 50-50 look. 50% are through, 50% are not. Pretty clever, right? When I have this 50-50 look, when the momentum is its absolute strongest, guys, this is an area that has the potential to break. You can still capitalize on this look, but you would be taking an entry. You could be taking an entry based on the potential of the area to break, not because it's broken, which means that rule number 2 isn't met. And guys, if you look at a trade, if you look at your chart and you can't say I have momentum, clear path, and entry area, you're looking at what we call a medium probability trade. And a medium probability trade means that most of your indicators line up for a trade. Most of your indicators line up for a trade. However, an issue exists. In this particular trade, the issue is that you don't have a clear path, which means that you should embrace the idea that momentum is mandatory and that your entry area is solid and low risk, guys. And I will give you a plan that optimizes your chances of success with this 50-50 trade. And I can tell you that this is going to be the majority of your trades. But this is also the most lost trade because people get excited about trading and they forget to talk about advantages. So there will be times when your path isn't clear because the areas are stacked, guys. There'll be times where you begin to get bored because you don't have a clear path. And this is 90% of your day. 90% of your day is doing nothing. It's okay to do nothing. It's all right to sit on your hands. It's acceptable to not be in every move of the market, guys. The market trades, I put billions every day, but we went back and researched. The market trades trillions every day. The market averages $220 billion an hour, the Forex markets. You only need to catch $400 of that to be in a six-figure income from your trading. It's not necessary to be in every move. You don't have to be first. You don't have to be the last person out. Trade with those advantages, guys. Learn to insist on those advantages. Learn to demand those advantages before you're willing to risk your money. And rule number 2, what we just talked about, Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. Very often, rule number 2 can keep you out of trouble, can keep you out of consolidation, can keep you out of chop, guys. And 90% of your day is doing nothing, is waiting for these areas to clear, is waiting to have those advantages, guys. Train yourself to wait for those advantages. And if we go back to that, I believe it was the S&P chart that we were looking at. This is an outstanding example of resistance to support, weak triggers, right back to support. Even with odds favorable momentum, this fib held. Straight back to resistance, the potential to break but didn't, retest resistance, and then you get the breakout. There was a lot of opportunities to lose money in that range if you weren't following rules, guys, but there's even more opportunity if you wait for those advantages. And I'm going to say it again, the difference between my successful traders and you guys that are struggling is the ability to do absolutely nothing when there is nothing to do, when there is not a statistical advantage. So, would you guys do me the honor, if you're comfortable with momentum, the separation of the triggers, if you feel pretty good about the idea that when price reaches an area and the triggers are below or above, you don't have to trade into it, guys. Momentum and a clear path. Is everybody comfortable? Once you understand momentum and a clear path, you have everything that you need to create a solid trading plan. Once you understand momentum and clear path, you have everything you need to make a consistent trading plan, a profitable trading plan. These are the two advantages that if you're brand new, if you're struggling, I want you to learn, embrace, commit to memory, and choose to never fight. Once you have them, we're going to go to the refinement chart. You guys are going to pinpoint where the market is most likely to continue, where the small crowd is most likely to fail. You're going to do it with such accuracy that you're going to use a limit order to buy or sell that little pullback they create. And you're going to do it in an area. Fibs, mid-bands, or yellow 1-to-1s. And you're going to insist that those areas are inside of triggers, guys. And it's this precision that reduces risk, that maximizes profitability. But if you turn your attention to the small chart, if you go to look for that great entry, and 3 divergences print in the same price range, 3 cyan lines from a low, 3 losses of momentum, 3 magenta lines from a high, 3 losses of momentum, guys. 3 divergences in the same price range may terminate the trend. 3 divergences in the same price range on a small chart is the only time I'll say rule number 2 isn't met and my path isn't clear. When I have momentum, when I have a clear path, the only thing that's going to keep me out of that high probability trend trade entry is 3 divergences in the same price range. 1 divergence doesn't scare me, 2 divergences doesn't affect me. 3 divergences keeps me out of the trade. 4 is right out. But if they're not there, guys, we're going to use a limit order to buy or sell a pullback, and we're going to do it at areas inside of triggers. The way areas on the large chart could create problems, bounces, areas on the small chart, we're going to use their ability to create a bounce to continue with the trend, guys. So rule number 3, I'm going to use a limit order to buy or sell a pullback at an area inside of triggers, inside of favorable large triggers, new users. Because favorable large triggers are wide, they're angled in the direction of the trend. Your large and synthetic are overlapping like 2 snakes riding piggyback. Price returns to large triggers, guys. It's a math thing. Price returns to large triggers. On your large chart, price returns to large triggers. The large triggers from your large chart are these synthetic triggers. Price returns to the large triggers on the small chart. Guys, your smooth triggers are the large triggers on the small chart. These are the same triggers that you're going to use to establish momentum, that separation between the small and large. Guys, when these are overlapping one on top of the other, when there's areas inside, this creates the smallest window of opportunity. This is the absolute most precision to understand where the small crowd is most likely to fail and where the market is most likely to bounce and continue with that trend, with that momentum, with that clear path. So every time you look for a trend trade entry, guys, I want you to say to yourself, I believe language is so important. The small chart price may return to the large triggers, and the large chart price may return to the synthetic triggers. And when those areas are one on top of the other, there is one correction point where I expect price bars to return. And when there's areas inside, small chart may go to the large triggers, guys, and I've got fibs and a 1-to-1 in there, and these may produce a bounce. But that mid band inside of the synthetic triggers may also be the bounce point. You're going to create a window. You're going to create what I lovingly refer to as the window of opportunity. This becomes the range where the market is most likely to continue, where the small crowd is most likely to fail. And guys, it's a pretty simple process to identify it. It starts with the rules being met on the large chart, guys. It starts with momentum, making sure that you have a market that's likely to continue in the direction of the trend. And then we couple with that a clear path. Absolutely nothing on that large chart that may produce a bounce. And when we have that momentum, when we have that clear path, your small chart is going to look a lot like this. And it's going to be screaming in the direction away from you. And you're going to begin to panic. And you're going to say things like, oh my gosh, they're going without me. Oh no, how am I ever going to get paid? this isn't great at all. I'm just going to have to jump in, guys. And most of you finally get the courage to jump in right about here. And this is where the process begins. On your small chart, we're going to wait for a reversal bar. You're going to train yourself to be patient to wait for that reversal bar. And when that reversal bar prints, you're going to say to yourself, the fight is on. The small crowd is doing their thing. This signals the beginning of the retracement, and this is not your entry. I don't hit buy now because now I'm on the wrong side of those triggers, and this is a loss of momentum. Once I get the reversal bar, I identify my large and my synthetic triggers. And I remind myself, this is where price may return from the highest point of the triggers to the lowest point of the triggers. So the tighter they are, the smaller that range is. And then I have to say to myself, my entries don't come from trigger lines. I need something to create a bounce. So I look for the areas inside of trigger lines. Fibs, mid-bands, and yellow 1-to-1s. No line is more important than the other, guys. Fibs, mid-bands, and yellow 1-to-1s. And I'm going to create my window of opportunity. And my window of opportunity will extend from the highest point of support to the lowest point of support inside of favorable large triggers. And this blue box is the precise area where if this is going to be a trade that works, the small crowd is most likely to fail. Where if this is going to be one of my 70 to 80%, the market is most likely to continue with the underlying trend, with the overall momentum, guys. And because of those advantages on the large chart, your job is to activate a limit order a couple ticks above that highest point of support, understanding, trusting, believing wholeheartedly that this is the recipe for your success as a brand new user. And they're either going to fill you or not. And this is the entry for the high probability trend trade long. And because it's the futures markets, we can go short. And it's the exact same thing, just different colors. We start with trading with the trend. We start with identifying with momentum. We insist that the path is clear. And then we patiently wait for a reversal bar. We wait for the fight to begin. And at the time of the reversal bar, you're going to look for those trigger lines, large and synthetic. Are they one on top of the other? Are they stacked? Is that correction point tight? Do I have areas inside of that correction point? Do I have something to create a bounce to continue with the trend? Some place for that small crowd to fail. Guys, your job is to put your limit order 2 ticks below the lowest point of resistance inside of favorable large triggers. What you have just done through momentum, clear path, and entry is you have pinpointed exactly where the market is most likely to continue. Can you guys give me a why in the room? Guys, this is it. 3 rules. Most of you will have this pattern down within a week or 2. And then you'll have to study to trust it. And what you'll find is the more you follow it, the more you study it, the more you trust it, the more likely you are to win because you focus on the process and you stop worrying about the results. Once you can identify where the market is most likely to continue, ladies and gentlemen, this sets you up to understand where the market should not go. Anything beyond those triggers is where the market shouldn't continue if this is going to be a winner. Anything beyond the areas inside of triggers, guys, anything above those trigger lines in a short is the wrong side of the trigger lines. This is where the market should not go. Anything below the trigger lines for a long trade, this is where the market should not go. And your initial stop will be 4 to 5 ticks above the trigger lines for a short or below the trigger lines for a long. And Sid, let's do it one more time. Large chart says up. Let me give you this picture, Sid. We'll put them side by side so you can see it. Let me blow this up and let's see if we can... I'm going to draw for you. I hope that's okay. I like to scribble, guys. So everything starts, Sid. This market's trending up. The background is green. I'm only looking for rules to be met for high probability trend trade long. And let me show you what this looks like in the moment. When you're looking for the trade, you're going to say, do I have momentum? Smalls above large, large or wide, angle to the direction of the trend. And you're going to say to yourself, absolutely, the scissors are open. This is the market that's likely to continue in the direction of the trend. And then you have to ask yourself, Sid, you have to say, hey, do I have room to that trouble spot? Have my smalls smashed through the previous fib? Has my large gotten above it? And if the answer is yes, Sid, the market will be trading right here. And you're going to be panicking that you're not in it. But here's the cool thing about the methodology is right at the top of this bar, when everything says up, when the path is clear, when the market is strong, this is where the small crowd tends to fight. Guys, the market is nothing but fear and greed. It's ups and downs. We're going to capitalize on the downs, Sid. So your job is to wait for the reversal bar. And this reversal bar signals the beginning of the pullback. And some of you are going to say, but Mark, there was one-to-ones. Guys, areas are defined on the large chart. Don't let a small chart line freak you out. This may be exactly what you need to get your pullback. And then Sid, once you have that reversal bar, you can look from the top of your triggers to the bottom of your triggers. And this is where you're going to say, this is the range where these price bars may return. They may come up here and they may go all the way down here. Are you with me so far? We still haven't pinpointed our entry. We're just saying, hey, this is a pattern. This is where it may go. And then you're going to say, it may bounce off the highest point of support and continue with the trend. It may bounce off the lowest point of support and continue with the trend. I don't know. I'll never know. But what I do know, Sid, without question, is that I can pinpoint where the market is most likely to continue, and being able to do this lets me know that my initial stop belongs 4 to 5 ticks below these triggers. Because what am I below? I'm below every advantage. I'm below the area that's likely to create a bounce. I'm below the range where the market is most likely to continue. And guys, they're going to have to come get me. When I have momentum, when I have a clear path, when I have areas inside of favorable large triggers, I am not going to put my stop right there hoping that I don't have to watch my P&L go against me. I'm not going to put it right here hoping that the mid-band miraculously creates a one-tick bounce. My stop goes where the market shouldn't, guys. And anything that wins 70 to 80% of the time, you got to accept this. That small crowd is going to go straight to your stop, guys. And this is a cost of doing business. This is a normal part of a positive equity curve. It's a very natural part of being a day trader. Other things that people say, Mark, I don't have any room to get to trouble. Has anyone ever done this? I'm only 8 ticks away from that line. I can't take this trade. There's no room to get paid. And it's because you're not using the language. My entry comes from a pullback to an area inside of favorable large triggers. My entry gives me over $300 of profit where there was only 80. Guys, this is one of the things that we do. This maximizes your profit potential. Remember when I said you'd be able to use those tails to study? If your rules are met, circle a tail. If it lines up with areas inside of favorable large triggers, take that picture. Sid, does that help a little bit? Once you can define where the market is likely to continue, ladies and gentlemen, you understand stop placement. And the great thing is, and Rob, we talked about this one this morning, after the market confirms the trade, moves in the direction of the trend of the momentum of the clear path, once you get a reversal bar down in a short trade, guys, your new stop is 2 ticks above it. You're going to minimize risk. Once it gives you a reversal bar up, guys, you're 2 ticks below it. Below it, that's a word. You've minimized your risk. And it's not uncommon to see you guys take these sniper entries and you're so excited and that damn small crowd pushes it down. And guys, this happens sometimes. But it's not uncommon to see you guys giving up $30 or $40 rather than $300 or $400, relying on hopes and wishes and wants and all those things that rarely pay dividends to the day trader. Your precision on entry is going to make these trades that don't work out. And I know I have a picture of it somewhere. It's going to make these trades that don't work out. Guys, your entry was right here. Your new stop was right here. You lost 4 ticks. 4 ticks on a trade that failed because you understand how to pinpoint where the market is most likely to continue. Because you understand where the market shouldn't go. And because you believe in your heart of hearts that once they start going that way, there's no reason to leave a lot of risk on a trade. We just did the best of the best, guys. We did the highest probability, optimize your chances of success for the high probability trend trade run. Are there any questions? Are there any questions about momentum, the separation between the small and the large? Terminations, the entry. Guys, what I've just given you is the absolute best of the best, highest probability. Oh my gosh, life is perfect. Entry. Let's be real. The market's not going to give that look. The market may give that look 2, 3, 4 times a day on a great day. And very often you're going to have to rely on your chart reading and your understanding of these indicators to pick your entry sometimes. So this is the easiest look, but it's not always the look. Very often, you guys are going to see what we call split triggers. And when you have these split triggers, large away from the synthetic, no longer 2 snakes riding piggyback, what you have to say to yourself is that I have 2 spots where price may return. It may return to the large triggers, and it may return to the synthetic triggers, and I will never, ever, ever know which one it's going to be. And then you have to use the same words, guys. I've got 2 areas that may produce a bounce. It may bounce from that mid-band, and it could bounce from Fibonacci support, and I will never, ever, ever know which one it's going to be. I could take a guess, but I'll never know for certain. But what I do know without question is that my stop goes below that lowest trigger. That is an enormous amount of risk. Is everybody with me so far on this? Because this is the lesson that's going to pay dividends as you grow. I've got 2 bounce points. I've got 2 correction zones, but I've got 1 spot way the hell down here where my stop needs to go. Everybody good? This is where the idea that a confirmation bar, my entry isn't perfect. I'm going to force the market to confirm the move in the direction of the trade. I'm going to force the market to give me a reversal bar, because once I get a reversal bar, I'm 2 ticks below it. My risk is established, and it's no longer all the way down here below these triggers. Now it's right here. It doesn't guarantee a win. It does not assure that you're going to be victorious. But what it does do is it says if for some reason they go from here, I'm in, life is good. And if they decide to go down to this next correction zone, to the next bounce point, I'm going to take a small loss, and I'm going to be willing to re-enter, maybe with confirmation again off those synthetic triggers. And guys, that's the best of the best. So your job is to begin to learn to study it, to learn to believe it. And when you have odds favorable momentum and you see a tail, circle it. Guys, that is momentum and the potential to break. Would you give me a Y in the room if you see how this is one of those momentums and potential to break? And that tail, where's my small chart? That tail is the pullback on the small chart. And that pullback on the small chart pulled directly to 1-to-1s in a mid-band, but they're caught in between the triggers. And if you entered arbitrarily at the mid-band, your stop had to go all the way up here. But if you waited for the confirmation bar, your risk was minimized. And guys, that momentum carried this market all the way down to where it reversed off of Fibonacci support to the tick. This is what I talk about every day, guys. My goal for you as a brand new user is to learn how to read your indicators, to learn how to recognize advantages, to speak to yourself out loud each and every day when you see them. I do have momentum. I don't have momentum. My path is clear. My path is not clear. Because that outside voice is going to keep you from wishing, wanting, hoping, and praying, guys. So the easiest way to get to where you want to be, the easiest way to become a chart reader, isn't from taking trades over and over hoping that it sinks in, guys. It's from taking pictures over and over, committing these looks to memory, learning these looks so that they become easy. So take 25 pictures of strong triggers, take 25 pictures of weak triggers. Talk about the whys. Why are they strong? Why are they weak? What does it mean to me? What's the advantage of strength? What's the disadvantage of weakness? Why don't I want to turn into a termination condition? And guys, if you go to your 101 and you start filling this up, and I want you to see, I'm 54 deep. This is your study guide. And if you go back and do this, guys, this is the look, right? Small above large, scissors open, odds favorable, rule 1 met. Seeing it is awesome. That's going to start the process of memory. If you actually type this out while you look at this, you create a connection between your eyes and the rule that's being met. You create a connection between your brain What does this look mean to me? And the process of typing it out begins to cement it, guys. Same thing here, right? Over and over. And then there's your week. One picture, 3 rules. So guys, I'm going to tell you, and I'm going to say it, and I don't mind saying it. Most of you won't do this. Most of you would prefer to suffer, to not get the correct read. Most of you don't want to do the work. Guys, you will get out of the software exactly what you put into it. So I would encourage you, knock this one out. Well, Mark, how could I be expected to take these pictures if I'm brand new, if I don't know what the heck I'm looking at? Well, let's go through it. This is your high probability trend trade. Is the market coming from a strong top or bottom? Guys, this is not mandatory to take a high probability trend trade. This is not a must-have. This is not an insist. But when a termination condition that none of the triggers break through reverse that market, guys, when your rules are met, this is the highest probability trend trade that you can take. Having a strong top or bottom creates some warm fuzzies, without a doubt. A strong top or bottom doesn't negate termination conditions. A strong top or bottom doesn't override having weak triggers, guys. But when the rules are met after a strong top or bottom, that's a great look. This is going to help you define momentum. This is a very clear picture with very precise wording. If you go take 25 pictures of each of these, you're never going to confuse the two. You're never going to convince yourself that that was a market screaming in the direction of a trend when in fact anything could have happened up or down. Is it a termination? Well, if no triggers are through, there's no clear path. That's what it looks like to have a clear path. And this is nothing more than potential. This is my second trade. This is the trade that needs to be managed aggressively. The quick profits have to be taken on, guys. Until you're good at these two. Well, how do I define my entry? Well, there it is. Reversal bar starts the pullback. Look for the triggers. Where are the areas? This is exactly where your limit order goes. And the second page on this one is a checklist for you to print out, to put on your desktop, to make sure that you're policing yourself each and every time you take one of these trades, that these are the advantages that you're speaking loud out into the universe, guys. These are what you need to be writing on your charts every time you annotate a chart. And I'm going to tell you, I see a lot of entries that are not from areas inside of favorable large triggers. And very often you'll write pull back to area, pull back to triggers, pull back. But you skip all of the important words, guys. And if you start writing these on the chart every time, if you start associating this phrase with your success, you find it easier to realize success. Don't ask me how I know. And then the KISS plan. Mark, I'm brand new. I can't write my plan. I've written it for you. Mark, I've been struggling as a long-term user and I'm not hitting the profits that I want to hit. Well, guess what? This plan's for you too. Whether you're brand new or whether you've been with me for 19 years, guys, this is a plan that optimizes your chances of success with the high probability trend trade. For you new users, this plan is a stepping stone in your learning journey, the first trade, not the only trade. For you older users, this is your going back to square one and refocusing on advantages and the language that you use when you look at the market, guys. Through simulation, study, class feedback, and continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's an AI-generated way of saying, guys, once you can read your indicators, you're going to see more opportunities. Once you understand momentum and clear path, you're going to see so many different ways to capitalize. Your simple plan for consistency, guys. The simple, easiest, best way to not find yourself on the wrong side of things is don't fight the large chart. Don't fight the momentum that's been created on the large chart, hoping that you can be the first person into the market. Don't fight the termination conditions, hoping you can stay in the market longer than the large crowd wanted to be there. Guys, these are the two biggest mistakes that users make, and if you can fight those two in the beginning, or go with those in the beginning, you're amazing. High probability trend trade doesn't teach you how to get rich. High probability trend trade teaches you how to see trades. Amen, Ron. Thank you for that. You have to define your entry. You have to define the point where the market is most likely to continue. This allows you to identify where the market shouldn't go. That's your management. And guys, I'm going to tell you right now, if you talk to trading gurus, They will tell you that successful, confident, mature traders manage their losses before they ever manage their profits. You have the ability to manage your losses by making sure that there's momentum on that chart and that any trades you take, the odds are favorable for that market to continue in the direction of the trend. You have the ability to manage your losses first by not trading in determination conditions, by making sure that you have a clear path. You have the ability to manage losses by making sure that you enter the market where the market is most likely to continue at the point that gives you the least amount of risk. And by putting your stop where the market should not go and accepting the fact that you will lose trades. That every trade will not be a winner. And if anyone has ever told you that every trade will be a winner, they've lied to you. These are the same people that will tell you that they drive the ball 370 yards every time they pick up a golf club. Once you define where the market shouldn't go, that's it. You're either going to get stopped out or you're going to get a reversal bar in the direction of your trade. Those are your two options, guys. Your management plan should be every bit as mechanical as your entry plan. If I get confirmation of this trade, if I get a reversal bar in the direction of the trade, then I will move my stop 2 ticks above it, 2 ticks below it, guys. And there's nothing for me to do at this point. I'm either going to get stopped out, good on the small crowd, they got me, or it's going to run to my first target. One of the most important things about this KISS plan, especially for the new users, is the KISS plan management, this very basic management, is dedicated to getting you paid. It's dedicating to getting money into your account because every time you win a trade, confidence, guys, confidence from that memory of success. Your first target is $100 away from your entry. 10 ticks on crude, 8 ticks on the S&P. And I'm going to tell you, you crude traders, very often, that reversal bar that allows you to move your stop is the same reversal bar that hits your first target when you take the great entry. So now I've been paid. There's money in my account. My palms aren't sweating. My heart has stopped racing. And I'm going to move my stop to break even. I'm going to make sure that I have absolutely no risk on the trade. And guys, I'm going to tell you right now, that's not your best stop. But you will craft a plan tailored to your personal goals based on your ability to read the indicators. That break-even stop takes the fear and anxiety out of your trade. And that break-even stop is designed to remind you that you would never be in this trade if it weren't for that amazing momentum and that clear path. And all it does, all that stop does is it gives you the courage to hold for the second target. And if you hit that second target, it's $200 away from your entry. Good morning, Wayne. It is $200 away from the place where you entered. You've already been paid. Second target gets hit. You have $300 in your account now, and you're out of the position. There's no more. That's it. It doesn't matter what happens next. Guys, you are no longer in a position. You just made $300 on the highest probability trend trade, and this is where I share this one with you. A lot of you believe that you have to get paid a lot on every trade for it to be worth your time. Has to be $1,000. Hey, good morning, Soph. Has to be $1,000. I can't have a trade that's only $200. What's the use? If I saw $200 bills laying on the ground, I would never bend over to pick it up. If I dropped a $100 bill in the toilet, I better drop 9 more if you think I'm putting my hand in there. Guys, that's a ridiculous. Our goal is to get paid. One high probability trend trade a day for the course of the year is 75 grand in your account. Add a break-even trade to it. You're in 6 figures, guys. What you're going to understand once you understand this trade, once you can read your indicators, once you become comfortable and learn to trust, is that it's not difficult to make $400 or $500 a day. It's not difficult to make $1,000 a day, as long as you're following a plan that has been proven to win more than it loses. And the more you deviate from that plan, the less likely you are to win. So when you guys go live, like you're gonna, whether it's prop firm, your kids' college money, whatever, there's 2 things that you have to know without question before you sit down to trade live money. Why will I enter the market? Do I have a plan? Have my rules been proven to win more than they lose? Have I tested them? Have I verified them? Do I trust them? And then you have to know why you'll get out. Why will I exit my trade? And guys, this is where most of you are going to falter. Everybody's going to get their entries inside of the first week if you keep it simple. But then you have something to lose, guys, and that's why that exit plan. is so important. Rules are nothing more than patterns that have been proven to win more than they lose. Rules are nothing more than patterns that have been tested. Nexgen's been testing this high probability trend trade for the last 20 years, guys. I've got pictures of trades that we started teaching in 2004 that you guys still take today. It's just patterns. You have to learn the patterns. Focus on your process, guys. Focus on your execution of the method. That's what yields the results. And rules help to remove the emotion associated with trading. If I know without any uncertainty that the pattern I'm trading wins 7 out of 10 times, my job is to take that exact pattern 7 or 10 out of 10 times, understanding fully that it will lose 2 to 3 and that I get no vote in which of those 2 to 3. So I can't input my opinions, my gut feelings, my fears if the last one didn't work. Guys, I have to be consistent in my process. So once you understand what it takes to get you in and you know what it takes to get you out, you're going to grow. The second you add another trade, you're forced to memorize, to know without any uncertainty the entry rules for that second trade and the management for that second trade. And if you're not comfortable with the first trade, this is where I see you guys get confused. This is where I see you guys skipping high probability trend trades because you let your 50-50 rules get in the way, or not managing out of a 50-50 trade because you let your high probability rules get in the way, guys. So you got to know what you're looking for to get to where you want to be. Whoops, I didn't mean to close that one out. Once you're comfortable with the KISS plan, once you're comfortable with a high probability trend trade, guys, once this becomes a little second nature, it opens the door for the second trade. Your second trade is the 50-50 trade. I should have just kept that big. I thought it was going to go side by side. And the 50-50 trade means that you don't have a clear path. The 50-50 trade means that rule number 2 isn't met. So this plan, attached to the KISS plan, guys, this is designed to optimize your chances of success with the 50-50 trade. This is the best of the best way to take it. This is the trade that you're going to see the most of. This is also the trade that you're going to lose the most of because you're not going to follow this plan, guys. Through simulation study, class feedback, continuous practice, you're going to create your version of it. But for the brand new user, the easiest way to do this is to make sure that it's only one area that's not broken. Don't force the market to break through 7 areas to give you this trade. My gosh, that's a lot of decision making. Let it be one area initially. Make sure that it's from a strong top or bottom. Make sure that there was that impactful area that created the reversal that heightens your chances of success. Make sure, because we're giving up a clear path, that both your small and large chart have strong triggers, small outside of the large. And guys, divergence is a loss of momentum. Write that down on a piece of paper. Divergence is a loss of momentum. And I love this picture. I'm going to do this again. I do it a lot. If I have already sacrificed my clear path, does it make sense to be cool with giving up 66% of my advantages by giving up momentum through divergence? This is the biggest killer of the 50-50 trade. So much so that it reminds you, seriously, don't do it with divergence, new user. You're more likely to lose. And then when you get to management, it says it again. Oh, please, Pete. Divergence is bad, you brand new user. David, it's in red. Nanda, this is the one. And guys, you'll grow. And you won't worry about divergence in certain situations, maybe later in life. But as a brand new user, doesn't it make sense to optimize your chances of success? So the thing I told you this morning is I promised you I would give you everything you need to be successful with the software. So there's a zip file right there, lovingly labeled everything you need. We learned the trigger line and the Fibonacci rules for when it's okay to trade. We broke them down individually. You've been given your way to study them, exactly what they look like, exactly what they mean to you, exactly why they're important. Your job now is to simulate, to practice, to be okay losing a few, to celebrate winning a few, but to get your focus on following these rules because of the statistical advantage that they provide. We simplified. I didn't talk about all the other trades you can take, but they're out there. They are out there, and the better you get at the high probability trend trade, the easier it becomes to recognize them. You have to learn the looks so they're easy. You have everything that you need to be successful. The only thing that you don't have, ladies and gentlemen, is the experience for it to be easy. That comes through repetition. The only thing that I can't provide you is the drive to do the work. That's on you. Could you imagine if Tiger Woods' coach said, hey, you keep shanking this ball, here's how you fixed it? And Tiger Woods said, nah, that's cool. I'll just keep hitting them until it fixes itself. That's what you guys are doing that don't do this work. Trust me, that's it. That's as far into it I'm going to go. And one more thing before I take a break. You're not in charge. You'll never be in charge. You'll never know what the market's going to do. You'll never know if it's going to go up or down. You'll never know if it's going to fight. You never know if an area is going to break, guys. Your job is to be like the remora to the shark. Let the shark do the work. Let the shark create the trend. Let the shark establish the momentum. Let the shark clear. Let the shark clear. And then we'll get ours, guys. We'll take it $200, $300, $400 chunks at a time and get to where we want to be if we remember that the market doesn't care about us. The market doesn't care about our position, our rent, our mortgage, whether or not our wife's going to be mad at us. So let's just embrace advantages. When I come back for the second half of class, we're going to talk about 3 rules on every chart that's been presented. We're going to talk about momentum, clear path, and an entry area. If you showed me a momentum trade, we're going to talk about the 3. If you show me an HVA trade, we're going to talk about the 3. If you show me that white bar trade John Novak teaches, we're going to talk about the 3 because, ladies and gentlemen, this is an educational room and the goal is to become rock star chart readers. And there's lessons in every chart, whether it's high probability trend trade or not. Do not turn into the trade police. Focus on speaking in advantages. If you post it in my room, respectfully, you better tell me what you see. Otherwise, you're just showing off. And guys, I believe language is very important. If you show me a loser and the only thing you write on your chart is, damn it, I lost, you're not learning anything. There's nothing to go back and study. Talk about what you saw, what rules were followed, maybe what were broken. And what happens is if you really believe in the idea that you can go back each and every day and simply look at what you did yesterday, and move forward each and every day. If you embrace this part of the education process, guys, you're not going to be stuck where you're at for long. If every time you take a trade, you use your outside voice and you talk about advantages, you're less likely to break your rules. If every time you annotate your chart, you use the words from the language, from the rules, you're more likely to recognize and associate this with advantages, and that's going to increase your confidence. So, when we come back, you guys are going to take over. It's going to be your show. We're going to talk about it. And Ed, that's one of the biggest things. And this is what people don't realize, is that a lot of us have experience, and a lot of us have made a lot of mistakes, guys. And that's just a natural part of education, right? It's just one of those things that happen. But you can learn from your mistakes, or you can continue breaking them. And Ed, just like you, I spun my wheels for a long time. I really did. I spun my wheels because I was so focused on the money that I never took the time to really love the process. And once you focus on the process, guys, and you develop that trust, it's crazy how effortless your trading becomes. And it's amazing how confident you become in your stops. And I sent this one to my brother, a trade I took this morning. My stop was in the correct spot. I had every advantage that I needed per my plan to take this trade. And I said, they're going to have to come get me. And as they started coming down, and they got within 2 ticks of my stop, guys, instead of jumping out saying, oh no, it's all over, this sucks, I can't believe they're going to stop me out, because I forced them, they never did. My stop was right where the market shouldn't go. And they went right to my target. And guys, that is trust. That's the trust that you have to develop. That's the trust that you have to want in your life. All right, guys, so I'm going to go take 5 minutes. I encourage you guys, stand up, walk around, do the same thing. This is the S&P. The S&P has all the momentum we could ever hope for to the upside, and it has a big ugly line that it reached, and all the triggers are below. How many long trades can you take into a termination condition before it finally works? especially from a bad bottom? The answer should be 0. Guys, I'll be back in 5. Go stretch your legs. get to the second half of class. Is anyone a believer in termination conditions? I mean, wow. I love it. Not in practice. That's fair, Ed. That's fair. So guys, I'm going to scroll up to the very top of the chat box, and I'm going to start clicking on these links that you guys have posted. We're going to talk about the charts that you've posted and what you've done and what you see and what you're talking about. And we're just going to go back to those 3 rules every time. And I'll tell you what, I am just happier than a pig in poop for this one. Because this one is what happens when you start to trust, guys. Perfect rules-based trade. Odds favorable momentum. Room. Waited for the pullback. My profit target is 15 on the ATM. I bought the market at the midband. Stop was placed where the market shouldn't go. Profit target was hit in under 2 minutes. Elvis, in this room, termination conditions happen on the large chart. No matter what your plan is in this room, large chart leads the way. This is absolutely beautiful, Rob. And the only thing that I could say about this trade is what we talked about earlier, guys. When you get that confirmation bar, it's okay to reduce some risk. There's no reason to have all that risk on there anymore. What an outstanding trade. And guys, this is one of those trades that I steal from you guys, that I come through and I open up my spreadsheet and I'm like, wow, this is everything. Elvis, you're absolutely right 100%. This is one of those trades where I want to say this is Rob's perfect trend trade long, because I want you guys to be able to come in and see this one and to study this one and learn to believe this one. And Elvis, you're so right. It's just trade your plan, right? If your plan's different, that's cool. Your large chart may be different than my large chart. My large chart on the NASDAQ is different than my large chart on crude oil. And that's the beautiful thing about trading. Trading is an individual sport, guys. And just because yours doesn't line up with the basics that I teach in this room, it doesn't mean that it's wrong. But the flip side is that if it doesn't line up with the basics that I teach in this room, you do have an obligation, respectfully, to tell me what you're looking at and why, so that we can turn it into lessons. I know you do, Elvis. That's why I just let you. All right, Steve says, price below large strong triggers, small strong triggers, separated from large triggers with this momentum and trigger look, price has the potential to get to fibs. Steve uses the word potential. He says it could very well go down. He's below the fibs, and he says, let me get clear of trouble and let me make money. And the only thing that this trade is based on, guys, is momentum and clear path. And because that's the basis for the trade, Steve says momentum wavers all the time on small charts. Let me get in and let me get paid, and I'll just wait for the next trade because I've studied, because I've asked for feedback, because I've simulated. There's no doubt in my mind that I'll find the next trade, so I don't have to make $1,000 every trade. I'll take my 195 and wait for the next best one. And that's awesome. And then everything turns and it's odds favorable going up. Price above, everything's up. And there was trouble here. And Steve said, yeah, trouble can create a bounce. Let me get above it. And that would have been perfect, right? And you said that you missed it, and you didn't miss it, Steve. It just wasn't your money this morning. But it's a perfect read. It's a perfect read. And that market had to be screaming for you to be annotating and miss it. So it's okay. There will be more. Shoot, I got a shiny nickel says you're going to show us more before the day's over. Great trading, dude. Momentum and clear path. What a concept. Momentum and clear path. All right, Pete's last trade from yesterday. Like 8 of them on here. Market reversed. Triggers rolled down. You wait to get to the other side of it. And then Pete, that gap theory. So guys, one of the cool patterns that you can begin to recognize is that if you get to one of these key Fibonacci areas and those large triggers aren't following, very often it'll close that gap up to the large triggers. Does everyone remember when we talked about entries, price loves to come back to the large triggers? When they are more than a full bar away, it is more likely to happen. And this is one of those trades, Pete, where I think this one was just a little premature. You got excited. The small triggers are on the wrong side of the large triggers. You don't have the momentum. And it sucks right back up to those triggers. And the fact that you held it shows a pretty awesome ability to read your charts. But easier one right here. Once everything rolls, once you have the momentum, once the gap is closed, and that one is rock star all the way down. And then when it's done, it pulls right back to the perfect trend trade, and you make money again. And you took $1,000 loss, momentum in, little snapback, and you didn't believe that a loss of momentum could kill your trade. And then you didn't believe that divergence could kill your trade. I like that, Elvis. That's all right, Pete. I don't worry about you. It's not even about being right. Guys, it's not about being right. It's about following your rules. I can't stress that enough. I'll never be right or wrong because that assumes that I had any idea what the market was going to do. If I say I was right, it means that I knew the market was going to do something. I will never know what the market's going to do. Never in a million years will I be able to predict that. All right, Ed, termination condition. And then when everything rolls, you take the pullback right to the large, right to the small, right off the HVA. You missed your HVA trade, but that's okay. You let it all roll. Perfect entry, quick profits. Awesome. Awesome. And guys, let me show you something. And Ed, I like this trade a lot. Nexgen started teaching this trade, ladies and gentlemen, in 2004. Let a termination condition hold. Let the small triggers roll. Sell the pullback to the small triggers. It looks just like this on the small chart. Ed, perfect. Perfect, perfect. Nicely done. I already posted that one, Gary. And guys, one of the most consistent guys in the business right here. That's it. That's a great one, Ed. Great one, Ed. Odds favorable. Clear path. Let it clear. Quick profits, out at trouble, guys. Base hit. The ability to do nothing when there's nothing to do. The ability to sit still when there's no trades that fit your plan. And making sure that everything that you do looks exactly what you did last time and precisely what you're going to do next time, guys. Consistency. Consistency yields results. The more trades you have, the less likely it is to work, guys. I'm telling you. One of the smartest pirates I've ever met. When all your trades start looking the same, when all of your trades start having the exact same reason that you would get in, when all of your trades, the entries look exactly like they did the time before, that's when you get there. Ed, you told me you had one trade. Oh, there it was, right back, right? Missed the second go round. That's okay. You got this one. You were doing the happy dance. Embrace that happy dance, man. Nicely done. I will, Rod. I will write you a note. All right, Sid. Large triggers down, opening at path, break support. Small triggers below going down, not quite. Large triggers down, clear path short, so not quite. All right, Sid, let's turn this into a lesson. Let's turn it into a large chart lesson. In order for an area to be considered broken, both the small and the large triggers must be below it, which means that there's a lot of work to do. to get that clear path short. Does that make sense, Sid? And what's actually happened here is price reached this divergence low and this fib, and none of the triggers have broken through. None of the triggers have broken through. Your small triggers aren't below, your large triggers aren't below, and you're really kind of at a point right now where the rules say this is an area with the potential to hold. Sid, does that make sense? You've traded directly into a termination condition. Okay, cool. And this is okay. This is part of the learning process. And then over here, you just took the jump in, right? You said, I'm just going to jump in. I'm hoping. And you didn't even give it a chance to clear that trouble. And Sid, if it went down a little bit more and you started getting below all of this stuff, man, I might be able to get on board with that. But you really didn't even give it a chance. And these are the ones that are more likely to lose than win. Trading directly into a termination condition, especially on the NASDAQ. That's a tough look. Thank you for posting that chart. I think it's a great termination condition lesson. And I think once you start focusing on that clear path, it pays huge dividends. It really does. It sets you up for a lot more success. Like this. It's strong. It's down. There's nothing in the way. Ron takes a chunk. Guys, the exact same look going the other direction. Consistency. Everything set up. The path was clear. He made money up. The market turned around. Everything set down. The path was clear. He made money down. What a cool thing. And he called that one second base. Because second base, guys, base hits pay bills. All right, we've got the Cavs show here. Let's see where we started. There we go. If I kill some of these, makes it easier. All right. Cav's been with us for a long time. Cav doesn't care to write rules on the chart, but Cav's been doing this long enough that I understand his plan. So Cav gets a pass. If you're brand new, I wouldn't encourage this. Odds favorable momentum directly into a termination condition. Actually, maybe not. He's not showing me entries over here. 65. So he's in right here. Here we go. All right. Weak triggers. Divergence off the bottom. Large triggers roll. And Cav says, wait a minute. With divergence, that mid band, with this strength, I might be able to capitalize. It took me a second. I thought you were in up here, Cav. Cav says this is the perfect look to push up to the retest spot. And retest spot's the mid band. And that's exactly where he got paid. Cav, I like this trade. I thought you were trading into the termination conditions, but you weren't. Cav was catching that move off the bottom with odds favorable momentum and room to get to the mid band. Awesome trade. Everything clears. Everything's going down. Get in, get out, money, money. Same one. Chili dog. Great look, Cav. Everything says down, not a clear path. Oh, what a great lesson. Here we go, guys. Here we go. Satellite radio. Whoops. I'm going to give you guys one of the greatest lessons. And Sid, this goes back to yours too. If you're doing these JTFI trades, guys, relies on momentum. Lines cause bounces. That's all you need to know. If you're just going to jump in, you're relying on momentum, guys. Lines create bounces. They create bounces up and down and up. And when it finally started to work is when he got out, right? That's a lot of heartache for just a couple bucks. But look at this. Once it cleared, it was easy street. You guys that just want to jump into the market, whoops. You can do whatever you want. I don't care. I don't tell you how to trade. I don't know about you. My hair is thinning a little bit. That's going to take the rest of it out. It's so much easier once the path is clear. Does that make sense, everybody? We all want to be first. We all hate to miss trades, guys. Let the path clear. Get to the other side of trouble. Instead of trading into trouble, trade from trouble. It'll change your world. And here it is. From trouble to trouble, from trouble. I mean, talk about learning lessons fast. Cav, I had no idea this picture was coming. But how's that for a visual? Isn't that awesome? Awesome, Sid. I hope you find it. I hope it fits your rules. I mean, beautiful. Cav, outstanding. Great trading. Not one high probability trend trade in there and an awful lot of winners based on clear path. All right, Wayne's turn. Notice that the pullback to small triggers is a good entry point. Am I wrong? You're always wrong, Wayne, if you're married. Wayne, this is the trade. 2004, termination, small triggers roll, sell a pullback. Termination, small triggers roll, buy a pullback. John Novak started teaching this in the early 2000s. It sounds old like that, doesn't it? So when you guys start trading, start understanding advantages, you're going to see patterns. And Wayne, you nailed it. And this is exactly what it looks like. Termination, no triggers through, small triggers roll. This is what it looks like. And the cool thing is, Wayne, is it keeps you from trying to jump in right here. It keeps you from trying to get in right before the retracement. You're like, man, the most common pattern is that pull back to the small triggers, to the large triggers. You nailed it, man. Guys, that's cool. That's when your chart reading starts to open doors. These two entries, weak top. Do you see the gap theory, Wayne? You reached Fibonacci support, none of the triggers broke, large triggers were a full bar away. You knew exactly where that market was most likely to retrace. And then they had to make a decision. And when everything rolled, that was it. That was your trade. You didn't have to be first. But they tested support, they reacted to support, and everything continued down. And then when every chart agreed, you found your trade. Cheap date with market flow. But that's 100% chart read. Termination pushes all the way to support. Triggers remain above. This is an area that may stop the market, that may create an untradeable bounce. Because the large triggers were a full bar away, Wayne knew exactly where that untradeable bounce was most likely to go. Once Wayne got to that untradeable bounce point, he said, oh no, everything says up. Why on earth would I go short? Because my life as a day trader is about advantages. I'll let everything say down again, and then I'll get paid. I love it, Wayne. I love the way you handled that. My plan. Everything says down. I'm not sure. That was your entry right there. Maybe this is a different chart. Pull back to mid-band inside a trigger. So it's just a trend trade. First target, stopped out, re-enter on the trend trade, and both out due to third divergence. Great trade, Wayne. Awesome trade. Looking for my read 50-50 with momentum. What do your rules say? So let's talk about it. And I think you already know the answer, Wayne. So high probability or medium probability? 50-50 trade, potential to break. And Wayne, I want you to see something. It's the potential for the one-to-one to break. It's the potential for the divergence high to break. It's the potential for the fib to break. That's a lot of areas to break. Where are you coming from? You're coming from a strong bottom. You have a pivot stop out at support, Not one trigger line broke through. The medium probability trade is more likely to win. Are you with me on that? That's the large chart read. So let's go to the entry chart and let's talk through some stuff. And guys, this is the way my brain works, and yours may work different. I'm looking for a medium probability trend trade entry. It's not perfect. I want momentum because my path isn't clear. I prefer not a lot of risk because it's only medium probability trend trade. So this is where my brain goes every time, Wayne. What am I getting into? What are my advantages? What are my disadvantages? Am I willing to get in at 2,800? 2,800 for whatever, and have over $200 worth of risk on a medium probability trade per contract. Some of you say, yep, no worries. Some of you say, absolutely no problem. We're good. Some of you say, the only way I'll take this trade is if my risk is minimized from the bottom of the window. This divergence helps it get to the bottom of the window. So Wayne, that's one entry, right? Some people will say, it's medium probability. It's got a lot of work to do. There's a divergence. I'll pay for confirmation. Because again, this establishes my risk. And some people will say, I'll get in halfway up the previous down bar. And I'll put my risk right here, and it either goes or it doesn't. But once you talk yourself through what it is you're looking at, I'm looking at a medium probability scenario. I've got a pretty good looking entry right here. I can do it very low risk. I'm coming from a strong bottom. The momentum is outstanding. Is it worth 70 bucks? Or is it worth 200 bucks? And those are the questions that you can only answer yourself, Wayne. But if you talk through it like that, what are my advantages? What are my disadvantages? Where does my stop go? Is that risk okay for me? I think what happens is you start answering your own questions. There's a gentleman that's been trading with us for a couple years, and when he has a medium probability trade like this, he'll put his entry right there at the mid band, and he'll say, I'll take it here, and if it doesn't get me, so what? I'll find the next trade. And I think it's brilliant because he knows that it's not high probability, and why on earth would he risk $200, $250 a contract on something that you're just hoping the darn area breaks? Does that help? It looks like you had the exact same line of thinking. And guys, just because I say it doesn't make it truth. It's just chart reading. That's all it is. All right, Z-Robot, it's good to have you back in here, man. A plan you worked on is based on bumping contract quantity from 1 to 7 and performing the same KISS rule over and over and over. A momentum trade, correct? So let's see. Everything says up, potential to break, pull back to an area. And notice how it's on the wrong side of the triggers. A little dangerous. And then it pulls back up, momentum. Oh no, you're above it right here. And then there's your second entry, and you're out of trouble. I love it. This one, and can we talk about the first one, Z-Robot? And it only went up, so that area didn't break, Wayne? So Z-Robot, one of the things that I talk about every day, and one of the reasons that I believe language is so important. Once I get below these triggers, I don't know where the market's going to go. And you said I'm just going to get in at the bottom of the triggers, right? But there's nothing there to create a bounce. It's where the price may return, but you run into this problem right here where you may end up going below. And is it going to be this fib or these 1-to-1s, or is it going to be this fib here? And one of the things that I encourage people to do when you have, and I'm not sure what kind of bars you're looking at, when you don't have your areas inside, I love a little confirmation, because that confirmation bar gives you stop placement. And it held beautifully. And then you got out just before trouble. And then when it pulls back, the exact same thing. That one's right at it. That's a little more clear here. But it's awesome. Great job. And then out at trouble. Bad eyes to see tails. But you don't need tails for entry, Z-Robot. You don't need tails for entry. You need pullbacks to areas inside of favorable large triggers. The tails happen after the fact on the large chart if that mid-band's going to hold. You need a pullback to an area. The tail is a byproduct of the pullback. The tail is nothing more than the retracement on the small chart. You don't trade tails. You're better than that. You pinpoint areas inside of triggers, and then when it goes all the way down to here, that's when you get the bar with the tail. And guys, that was pretty. I hope somebody shows me that one. Great trading though, Z-Robot. And nice to have you back in here and participating. I get attached to you guys. Steve Diego, really? Odds favorable momentum. You're going to do that again, Steve? Nothing in the way. This is going to be your basis for entry. You're going to wait for trouble to clear, and then you're going to get in. And you're going to take that quick profits. And guys, there's nothing worse than taking $200 and watching it run. And a lot of you guys are going to change your management plan on the next trade because it went without you. I love your exit, Steve. It's consistent. It's the same thing that you do every time. It's the same thing that you do every time. My gosh, I can't stress this enough. His last trade ran, and he still followed his plan. He still took it. $200 a trade. Steve, you show me 5 or 6 of these a day, right? Does it stand to reason that on base hits, Steve's probably making a lot of money? All right, Wayne, go new, trade performance. Whoops, and it'll bring up this bad boy. And if you're just looking for the day, make sure that the dates make a match. Sim, futures, 2-lot, whatever you're doing, and then just hit generate. And that'll let you know where you're at. I'm having a pretty good day. I made almost $1,200 this morning on 75% winners. That's not so bad. That's not so bad. Did you get it, Wayne? New, trade performance, put your dates in. Very nice. That was 0 trade. Did you hit generate? Okay, so do this. Trade performance. John's a Yahoo, Gary. Make sure that you're in the right account. That's going to be a big one. Make sure you're in the right account. Make sure that your dates are good. All right, Ed. Let me figure out where the heck you did this. Coming off of a mid-band, everything rolled. Fib, room to the fib. Late on the entry. So you get in below the trouble, let it confirm the move down. Touch not filled on the target. That's frustrating sometimes. Great trade, Ed. This is the one where once you're on the wrong side of those triggers, Ed, once you're on the wrong side of those triggers, man, you don't know where it's going to stop. I love a confirmation bar. And you still had room to get down there. Nice job. Pineski says this is the holding pattern. I love that. So, Paul, are you saying that when termination, determination, 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 maybe it's better to do nothing? Well, that just sounds crazy. How will you ever get paid? How will you ever make money if you don't break rules, if you don't hope to be first, if you're not the first guy in? This is, guys, this is experience. And Kurt, the one thing that I want you guys to realize is that rule number 2 defined it. Rule number 2 showed you exactly where this market has to break out of in order to create an opportunity. Hey, Cav, take care, man. Great trading today. I love these pictures. Guys, if you don't have your rules met, take pictures. Take pictures of why they're not met. Take pictures of those termination conditions. I have odds favorable momentum. I have a clear path. What I don't have is I don't know where I'm at here. What I didn't have was an area inside of favorable large triggers, guys. This is where a confirmation bar pays dividends. If I see 3 divergences, that's a termination condition. Guys, if this divergence never prints, it's Downsville, population U. Does that make sense? Odds favorable, clear path, not a perfect entry. Why not wait for confirmation? You don't have to. You can do whatever you want, guys. I hate getting run over at a mid-band when it goes up to fibs, though. Hate getting run over at a mid-band. And look at that. 3 divergences didn't print, and it's still moving down. But Mark, the negative number was flashing. That's potential, guys. Does that make sense, everybody? Large chart's perfect. Small chart is not. It's okay to wait for confirmation. It establishes risk. There's no chart there. Sorry. There we go. There's crude. Whole lot of nothing going on. Steve, when you do something nice and credits expire quick, right? All right, guys. Once again, I'm going to do this. Does anyone have any doubts that somebody other than you knows exactly where these areas are? Does anyone have any doubts that trading directly into a line may not be your highest chance of success? Does anyone have any doubts that if you sit on your hands when it's not right, something else will come along? And it bounced instantly when it hit that fib. Bounced instantly when it hit that fib. Ed took your money. If you would just wait for the right entries, you would make so much more money. But everything says down, momentum is great. Everything says down, you get in. It turns into the perfect trend trade to establish risk. And you get out right before the fib. Can't ever get mad about that. But Ed, this is what I want to talk about with you. I don't care about any other chart with you. Doesn't matter to me. Couldn't care less. Ed, this is your recipe for success. Guys, I see your patterns and your path and the things you do all the time. And Ed, I'll be damned if we can find losers when you show me this look on your large chart. Would you agree? This is your look, Ed. This is the one that brings you success. Commit to it. Momentum and clear path, guys. Momentum and clear path. I can't stress that enough. Momentum and clear path. All right, Elvis, I'm going to put you in the hot seat because you're in my room. What is this? What is this? What is this? This is an educational room. Nobody knows what this is. This is a termination condition. No. But what is it? So price does 82% and you go long? No, that's not price. Large triggers and synthetic triggers down. No, wait. Small triggers roll? Oh, termination. So guys, one of the reasons I do this, and Elvis, I'm just having fun with you a little bit. If you're brand new and you saw this, how are you going to use that tomorrow to study? We're getting old, guys. We forget stuff. Price reach termination condition. Right? That sets it off. My large chart reached a termination condition. What else happened? I don't know what a W is at the termination, but this is a pattern, right? This is awesome, Elvis. But you're in this class because you need something. Is it a higher divergence? Is it a head and shoulders? What's your pattern, right? And then divergence from the same termination. But what does that mean? How big does the W have to be? Is it uppercase? Is it lowercase? Where do the triggers have to be? Range chart has divergence from the term. How did you get in? I let the range chart triggers get odds favorable momentum, and the small chart triggers roll up, and I entered and took profits at 250. Does that make sense though, Elvis? Because if you have to explain it in the room, then you're not explaining it on the chart, and if you're not explaining it on the chart, how are you going to go back and study it tomorrow to make it repeatable? Elvis, this is a gorgeous trade. I love this trade. I love everything about this trade. But nobody in this room has any idea what a W is. And show me a good picture of the W. I'll figure it out. But I see a head and shoulders, but where you entered, there's some rolling, there's some significant stuff. I love the trade, Elvis. Absolutely love the trade. But saw this. Ladies and gentlemen, if you're brand new and you're trying to create repeatability, saw this as a difficult plan to follow. But it's a beautiful trade. It's a termination with a pivot stop out where the triggers roll. Range chart confirms it with divergence and odds favorable momentum. Something happened over here that I'm not sure of, but it's a pattern that Elvis recognizes. I don't see a W. And that's the thing, is I don't see what you see, Elvis. So for me, a W is I see a lowercase n that turned around. Or I see a V. And it's kind of a W, but how do I know it's going to be a W? Because it could have just as easily gone down, right? No, I don't need my questions answered. It's okay. No, I can't look at that chart, Elvis. That is 7 charts with not anything written on it. I'm not going to try to learn your trading plan looking at it. All I'm telling you is that this is a beautiful trade. All I'm telling you is that this is a beautiful trade. But there's nobody in this room that has any freaking idea what you're talking about, because saw this as a horrible educational tool. Does that make sense without hurting feelings? Pretend like I'm 5 years old and you need to teach me your trade. That's what I like you guys to do in this room. Done for the day. Great job, Ed. Great job. See, but don't type it in the room. You're 89, I'm 52. Neither of us want to go back and forth between charts to read a conversation, to go back, to read a conversation, to go back. Isn't it easier? Doesn't it make more sense in a room dedicated to education to just put your rules on there? Everything says down. Clears trouble, great movement, strong triggers, walk off grand slam. 4 contracts straight to the fib. This is pretty easy for me. Everything says down, odds favorable, clears trouble. Instead of saw this. And Elvis, I am not trying to come at you, but I'm reminding you. And here we're trying to learn lessons off every picture that's presented. And here we're trying to go back to momentum. We're trying to go back to termination conditions. We're trying to go back to entries. I understand. Elvis, I understand. If you're a dinosaur, why are you looking at so many charts? Right? Your dinosaur is your cop-out for making bad decisions. You had a termination condition. You had divergence from the middle of nowhere. I don't know what this has to do with anything. You have an 8 range chart. You have a 13-2. You have a 5-1. You have a 90 second. You have a 55. And you have a 21 range. That's how your brain works. Oh my gosh, this would kill me. And that's the beauty of trading, Elvis, is we're so different, right? But at 21.64.32, prices on the we're over here. Where you entered, all of your triggers were down on the 34. Half of your triggers were up on the 21. On your 13, large and synthetics were both down. Only the small triggers were up. On the 5-1, everything was still wonky. Your 90 second still says down. Your 55 is kind of everything down. Everything down. Do you see how if I go back and do the chart read in this room and try to make heads or tails, I have to tell people, this fights half of your charts. But because you have a plan based on your ability to read the indicators, Elvis, it is nothing short of miraculous. Because that's your trade and you're so comfortable with those patterns. And I think it's amazing. And ladies and gentlemen, once again, when I have weak triggers and a bad bottom and it hits that mid-band and the large triggers don't follow, it's likely to close that gap. And I appreciate that you're my dinosaur in the room, Elvis. I really do. I really do. All right, guys, we're out of pictures. Hold it. Ron put one in. Feeling like a Dodger. Weak triggers, termination, hop in, get out at trouble. My gosh. Same thing over and over. Man, that was close, wasn't it? That was a close one. Nice trading, Ron. Great trading. Elvis, great long, taking care of those termination conditions. All of you guys that are posting, you're crushing it today. And guys, if you're not finding the success, Elvis, please stop doing that. Respectfully, please stop doing that. At this point, I feel like you're just trying to get under my skin. Guys, if you're not finding the success that you were hoping to find, simplify. Annotate your charts. Talk about it a little bit. Steve, Preacher Mark, you've made me a believer in trading from terms, not into terms. It makes a huge difference, doesn't it, Steve? I had to learn that same lesson. I had to learn, you know what? I almost held up the piece of paper on my desk to show you. I have a big note on my desk that says at or from. At or from. Am I trading at a termination? Am I trading from a termination? Because my challenge for as long as I have been a day trader, ladies and gentlemen, is I hope areas break. I hope that I get through them. And I finally just got sick of it and I said, let me get through them. Let me get to the other side. Let me get to the promised land. And guys, it has paid huge dividends in my own life. And there's a lot of you that I feel it's doing the same thing. Ron, have an awesome afternoon. Go scare some kids. Elvis, just message me privately and tell me what you want to tell me about it. Please. 7 charts, not one word written on them. 7 charts, not one word written on them. I can't confuse a bunch of new users who are going to say, oh my gosh, Elvis won this trade. I need 7 charts. Elvis fought every trigger line. I need 7 charts. I need to do what Elvis does because Elvis won. That's not fair to people that are learning a plan, that are learning to recognize advantages, that are looking for people to post in this room talking about momentum, clear path, and entry. So that's a standard that I hold in this room. That's something that I'm very insistent on. And I apologize if it doesn't work for you. And that's okay, Gary. It is hard to label the NASDAQ real time. And you know what I do, Gary, is I will literally, every trade that I take, I'll take 7 or 8 pictures of it. I'll just keep snapping pictures as I'm in the trade. And then I'll go back and I will begin. Elvis, that's not a high bar to meet. The only thing that I ask you guys to talk about anytime you post in the room, my only request every day on Bended Knee is talk about momentum, clear path, and entry area. And if you can't do me that favor, refrain. Reach out to me privately if you need help. Don't put the burden of teaching my class on you. But talk about these things because it is an educational environment. And these are the things that are important to the new user. And we can go back and forth, but I'm going to choose not to. I will not continue to reply. You've made your case. I appreciate it. Elvis, do I really take that many pictures? Let me see if I can find the beginning of a trade here. Let's see. That was the end of the trade. So I call my shots. I take my entry. I talk about it in the middle of it. I reinforce my lessons to make sure I'm on the right side of things. As I get close, I take pictures of my stop movement. And when I get there, I say, man, life's pretty kick-ass. I have a plan. And I check myself every time. Absolutely, Elvis. Why wouldn't I be that thorough trading real money? If you don't know exactly why you're getting in or where you're going, why are you in the trade? If you don't know where your targets are before you get in, if you don't know what it's going to take to get you out, why are you in the trade? If you can't do this and know exactly where you're supposed to enter and exactly where you're supposed to exit, why are you in the trade? That's kind of what I'm saying here. And you guys that aren't doing it, you guys that aren't doing that yet, you guys that can't map out where you're getting in and where you're getting out and why you would get out of that trade, you're the ones that can't do anything when there's live money. Hell, I go get a sandwich in the middle of a trade. Let's do it again. Hold on, let me find it. Wasn't awake for that one, but that was a good look. You guys think that I ask you to do all this stuff, right? Guys, I don't ask you to do this stuff because I'm worried about your wins and losses. I ask you to do this stuff because it works. Because when you take the right trade, you know where trouble is. I'm trying to figure out where it was. This was a good one. There was my entry. Heading up into it, right? Going through. And I'm not trying to beat you up, guys. So yes, Elvis, I do take that many screenshots. Ron, you're absolutely right. I'm giving away the golden goose. Don't fry it. And Gary, the rules are literally learning a new language. If you don't learn the language, you don't communicate effectively. I like that. Elvis, absolutely when it's real money. And you wouldn't be able to take the focus off the trade. And Elvis, that's okay. Everybody's different. That's all right. Everybody's different. And Paul, it might not break out. Elvis, how long does it take to take a picture? Watch this. Click, drag, done. I'll come back to it. That was half a second. That was half a second. Paul says it might break out. I say bullshit. It's been in a range for the last hour, 2 hours, and none of my triggers are through. I'm not doing it. Then Elvis, don't take pictures during the trade. We're not each other, right? It's okay. But when I tell you I take 10 pictures during a trade, yes, I take 10 pictures during a trade. But I don't take trades that I have to sit and babysit. I take the highest probability trades I can find. Gary, weak bottom, terminations, didn't take the HVA because there's no clear path. Wonderful. What a great picture. What a great picture. Hey, check it out. My rules aren't met. And even though this was enticing, I choose not to take it because my rules aren't met. Gary, these are the pictures that keep you from taking the wrong trades. And then Paul, respectfully, I hope this termination condition drops it like a ton of bricks. Because there's a good lesson there. Guys, if it's going to break, it'll break. If it's going to go up, they're going to get above this divergence line, this line in the sand. If it's going to go down, they're going to get below 69.35. Crude oil did you the honor of clearly defining where it needs to get up or where it needs to get down. And it's my personal opinion, and guys, this is not Nexgen, this is not trading rules, this is not trading advice. It is my personal opinion that if you can clearly define the area that stopped the market 4 times, I'm willing to let that area break. Elvis, I don't know what that means. I'll give you my phone number. If you want to set me straight, we'll talk. But don't tell me I'm not able to do something when I just showed you that that's exactly what I do. Please, respectfully, go argue with someone in the other room. Steve Diego, as you can see from your posts on NASDAQ, it takes a lot of time to annotate your charts. But it teaches you in the moment what you're doing right and wrong. So you miss many trades while annotating, but in your opinion, it's worth it. That's fantastic. What a great way to develop your skill set. What a great way to be in the moment with what you're seeing on your charts. What an outstanding way to reinforce that you're following your rules. Steve Diego, it's probably not a coincidence that you're crushing it. Thank you for sharing that. And Gary, you've been working on it. Your trading has improved when you recommitted to taking pictures and annotating even though you don't always post. I agree. Elvis, I trade with 2 charts. 2 charts. All right, guys, I'm going to take 5 minutes. Go stretch your legs, take a deep breath. That's what I'm going to do. I'll see you guys in 5. We'll finish strong. If you have any questions, post them in the room. If you have pictures, post them in the room. strong. I want to do something. We've all seen this before, right? Everybody's seen a green traffic light. How many people in this room slow down because it might turn red when they see this? Is there anyone in the room that goes, hey, look, that light is green. I should probably slow down because it might turn red. I should change my plan because of what it may do. Guys, this is kind of what traders do very often. It might break this area, but it didn't. And here, it might have broken the area, but it didn't. And it might have, and it didn't, and it might have, and it created a giant bounce, and now we're starting to get above it. And guys, it's always easier to let your indicators tell you what is happening instead of what you think might happen, right? What's happening in the moment? Do I have momentum? Do I have a clear path? And when you start thinking too far ahead, you create a little bit of a bias, is what I've found. I want to give you a little lesson that I see a lot on these consolidating areas. When rule number 2 has proven to me that the market's struggling, right? Buyers and sellers have been fighting for the last 3 hours to get out of this range. So now I have a 50-50. Guys, I have a 50-50 trade to the upside. When the market's been consolidating for 3 hours, there's one of two things that are going to happen here. You're either going to get the winningest long that you've ever had in your life, or that 50-50 trade is going to get slaughtered instantly because the sellers are letting the buyers think they won, and they're going to absolutely crush it to the downside. So when I've seen consolidation for 3 hours, if I take this long trade, I have to understand that it could turn on me quickly. And you see it a lot. John Novak calls it the fake out breakout. And let's see if we can find a fake out breakout. Consolidation. Oh, look, it's going to break. And then the sellers crush them right before the buyers take over. See if we can find it again. Consolidation. That's not the best example. Consolidation. Sellers thought they had it. Buyers come over. So, I mean, it either is or it isn't. It does or it doesn't. It goes or it won't. And that's the thing. And guys, you've got to understand that this is a pattern. And once those triggers get above there, I love it. It looks like the buyers won. And we'll see. But that's kind of one of those things that a little bit of experience in the market brings you. All right, Wayne, odds favorable, clear path. Man, you got in a little late on that one. Got your first target. And got stopped out on the second with divergence. Got your stop to break even. Just curious, Wayne, why so late on the entry? Your spot was here for sure. Yeah, but there's a time, right? So Wayne, if all you're relying on is momentum, getting in above trouble is awesome. But if you're taking momentum, clear path, this is it. This look says we're probably going to the next area. It's a totally different trade. Waiting for this right here, all it did is it cost you a lot of money. It's still a great look. It's a great read. But I think you confused two different trades there a little bit. Odds favorable? Yep. Clear path? Uh-huh. Entered inside of the triggers. Mid-band inside of triggers. Put your stop below. Blew you out. Sure did. I don't know if that's a blowout. It's $150, but was it the right trade, Josh? You think you read? I think you did too. Josh, if you took this trade with odds favorable momentum, with a clear path, with an area inside of favorable large triggers, if you took that trade 10 times, how many times do you suppose that trade would win? 70, 80%. So, how many times do you suppose that trade would lose? Just a cost of doing business, brother. It's hard to remember that when you take a hickey, though, isn't it? It's hard to remember that when you take a loser. Whoops. This is Josh S. Perfect trend trade long. Didn't work. I'll give that to everybody to study, Josh. It was perfect. I would love for everybody in this classroom to look at what you did there. It was perfect. You tried to get into the bottom but clicked the wrong entry. I've done that one before. I've done that one before. Where was that? Was that this one right here? Man, those rat bastages. That was a good look. That was even from a strong bottom. I would have taken that one. And then they just pushed. Dude, you took the perfect trade. You took the perfect trade. 50-50 on the high of that consolidation. It's weird that it didn't just run, isn't it? I gotta tell you, I am shocked and bewildered that it didn't just go north at 1,000 miles an hour. Muser. Not a big NASDAQ trader, but the look was familiar. Good bottom, odds favorable momentum, not a clear path for entry, but it was one of those 50-50 trades. 50-50 with divergence, rule broken, but great momentum, should continue up. Price pulls back. I know this was from yesterday. Yesterday, you say you would have waited for a close on the other side of the smalls. Is that a nuance for the NASDAQ or something I should be aware of on other markets? Muser, that is very much a NASDAQ nuance. So on the NASDAQ, and this is the important part, is the rules are met 100% on the large chart. Remember that the NASDAQ is a 34 and a 13, right? Those are way bigger than crude oil and ES, which means that the power of these 13-2 triggers is way stronger. There's a lot more behind it. There's a lot more volume pressure behind it. And one of the things that you'll notice a lot, Muser, is that when you get to these areas, if the small triggers are less than a full bar away, if they're below that reversal bar marker, a lot of the times they behave as resistance or they behave as support. And when I have this look, even on the perfect trade, as a NASDAQ trader, the one thing that I'll do is I'll insist on the close on the other side of the triggers, because what this does for me is it puts me on the winning side of everything, and it gets me to the other side of that momentum. And it's confirming that the market is going in the direction, and it's going in the direction from the good side of the triggers. And then the flip side of that, Muser, is if I get back to that area inside of triggers and my small triggers are days away, they're not a threat. I'll get in right at the area. Does that make sense? And it's on the spreadsheet, but I'll give you the link here. And that for me, and I'm going to tell you, man, I blew out a lot of accounts on the NASDAQ learning this trick. And you know how I fixed it? It was kind of cool. As I went back to my trade tracking sheet, and I started asking myself what worked and what didn't work. And I started looking at every trade, looking for common patterns, and that was the pattern that I came up with. And all I trade now, for the most part, is the NASDAQ. And I can tell you that my entries are reversal bars. And this is a good one, and Gino did this one day. Everything's set up, the trade is beautiful, and he just waits for the close on the correct side. And it's such a great entry. And I think that it pulls a lot of the stress out. It doesn't guarantee a winner, but what it does, Muser, is it helps you because it establishes risk as well. So great lesson. Good question. Thank you for that. How do I read this? You took one trade. It was a long trade. You made $169 on it. Gross profit was $172.26. You gave back $258 of it. Your commission was $10.32. Your profit factor is $66.77. I don't know what this is. Your max drawdown was $258. And I don't know what the probability ulcer sharp, I don't know what that stuff is. It's just telling you what you did. What I would do, I would go to the instructions. Sometimes I don't always have the answer, but I've gotten pretty good at finding them. Understanding the performance report. There we go. Understanding the filter options. Yeah, that's, I would go look at that. I don't get that deep into it, and yours looks a little different than mine. So maybe that wasn't as helpful as you needed it to be. Man. Guys, we got a couple minutes. What would you like to talk about? Wayne, did you only take one trade today? That's what looks weird on it. 2. Ah, I see. How high up does it have to go, Elvis, to create the... See, this is awesome. This is... Here, Mark, this is what I was looking at. Do you see the arrows where it goes down and then up and then down and then on the way up? That creates the W that I look for. And when the rules are met, when I have that termination and my triggers are strong, I'll look for an entry and it appears to be right above the top peak of the W. Is that right, Elvis? Looks like you get in just above the center point of the W. There you go. That makes sense. Thank you for that. That makes sense. That's easy to read. Guys, everything is patterns. I mean everything. Everything is patterns. Everything is repetition. Everything is seeing the same darn thing over and over and over until it becomes easy. And a lot of you get frustrated. He's trying to keep me into this stupid trade that only happens 3 or 4 times a day. Guys, the key is having a foundation. Build your foundation. Build your foundation. Learn the basics, right? Look at what other people are doing. But don't try to replicate them. Keep it simple. Keep it focused. Make it easy. You'll get to where you want to be. Once you learn how to read these indicators, you'll be able to start doing things a little quicker, a little faster. You'll get your chart reads a little sooner. You'll say, hey, I've recognized this pattern before. My large triggers are a full bar away. Well, heck, price may come back and close that gap. I've seen this before. Price reached an area and the triggers didn't break. Well, this can reverse the market. I recognize that momentum. That's the momentum that has the potential to break areas. But even if it reaches an area, that momentum is no longer my best friend because now I've reached a brick wall that may stop the market. All you're doing, guys, is you're building this bank and these patterns. And here's the biggest thing. For you guys that are struggling, you've got to develop trust. You have to believe that you're not going to win every trade. You have to believe that you're going to give some back every now and then, even when it's perfect, right, Josh? Even when it's everything that you had ever hoped for, you're going to give some back. And it's just a part of it. It's a part of being a day trader. So how do we define trust? Let's see if we can find one that relates to trading. How about this? To rely on the truthfulness or accuracy of. Do you guys rely on the truthfulness or the accuracy of your plan? You should. To stay or go and do something without fear or misgiving. Ooh, I like that. Without fear. Why do I have no fear? All right, Wayne, let's go through it together. Maybe I missed something. So I'm going to go new. And I'm going to go trade performance. And mine looks very different than yours. Are you on NinjaTrader 7 or 8? Wayne, you're on 8, right? Let's look at filters. So make sure that your accounts are right. Make sure that your instruments are right. Make sure that your template's right. That's the only ATM strategy that I used on this one. And this is what mine looks like. I'm not sure why yours looks different. Under filters, that's the only filters that I have. Oh, look at this. There's a video on that link that I gave. There's the generating. See, yours looks like this. Mine looks different. I wonder why. I'm not sure, man. I'd watch the video. Summary. Display summary. All trades, long trades, short trades, total net, gross, probability, start date, end date. Wayne, make it big. Make it big. So you've got that. That's what you're looking at. Stretch it out. There we go. Ha ha. There is nothing we cannot figure out together, guys. I like it when we do that. Good stuff. Guys, when you stop expecting to win every trade, you start winning more trades. Focus on the process. We got a minute or two. Anything you guys want to talk about before we call it a day? Got some quiet people in here. Zahir, how you been? Hopefully you're trading well. Steve, still back to basics. Miss Donna's in here. Miss Claire's in here. The wonderful Miss Anna B is always here. I love it. One more education chart coming. I love it. Bring it, Steve. Guys, if I ever get mad about being smarter than I was yesterday, get on me. I learned something Every day. Everyone read Mark's last post and burn it into your brain. It was a hard lesson for you to learn. When you can take a trade and know it should work and keep taking them, you will be a winner. Man, isn't that true? You warmed up on replay, Wayne, just to reinforce rules. Guys, I'm telling you, the only reason I sound smart in this room is because I was a colossal dumbass for a long time. I just figured out how to get better. You're out on the run, but listen on your phone? Oh, right, like the kids do. I love it, Jeffrey. Every day. All right. Odds favorable. Was it a clear path, Josh? I just want to be sure that I'm reading your indicators right. The small triggers have smashed through the divergence high, but the large triggers haven't quite cleared it. What do you think? No, it's very much in play. It's a big thing. It's a big thing right there. Your market's been consolidating forever. Goes right to the bottom. You catch it on the way up. Nothing wrong with a little confirmation. And you get paid. I like it. It's 140 bucks. Nicely done. Elvis, there is no angst. There is no angst, I promise you. Sometimes I feel like I have to redirect people, and sometimes I have to be redirected. That's life. That is life. Life very much works that way. I used to herd cats for a living. I used to have to manage 20-year-old kids. It's hard to upset me. But I'm also very vocal about expectations. Man, that looks like 3 divergences in the same price range, doesn't it? Like your exit, Josh. You guys remember when I said when the market consolidates for 3 or 4 hours, one side may get a push, but until it's totally clear, at least manage, be willing to manage, because it may be a fake out breakout. Elvis, I can't wait to make it to Dino. I think it's amazing. I think it's amazing, and I learned something from your pattern today, and I appreciate it. I just needed that description. I'm not a dino, but I sure am hard-headed. 89 and counting. Let's keep counting. Let's keep counting for years. We're just watching. Nobody knows what's going to happen here. Sometimes when they fail. Guys, there's a fight. Look at that. The market's been going down all day. And every one of those bumps seem to be right at a fib, and almost every one of those continuations seem to be right at a midband. That would be a pattern, wouldn't it? Not at all. So Elvis, let me share a story with you. Oh, Claire, I like it when you're hanging out. I see you guys even if I don't address you. I just want you to know that it's always okay to ask a question. Don't feel like this room's only for the new people. Guys, if you're working on anything, please ask a question. And I appreciate you being here. So, gosh, what was I about to say? Dagnabbit. Okay, so when I started trading, when I started learning Nexgen, John Novak ran the room. And guys, my brother is brilliant. Don't tell him I said that. But my brother is like crazy brilliant, like super crazy smart. And one of the things that he would say in the classroom when I started, and guys, I learned very differently from my brother. I'm very artistic. I like patterns, but the second you put words with them, they challenge me. It's the same way. I failed algebra 4 times in college. And one of the phrases that came out of that room very often was that it was obvious. And that's what reminded me, Elvis. Well, this should be obvious. You should see this. This should be obvious. You should know to not do this. It should be obvious. And it wasn't that he was giving me credit I didn't deserve. It's just to him, It was so obvious because he was 20 years into this. He sees things that people just don't see, and he takes for granted things that we don't have to discuss. And I always joke with him. I'm like, when you take the room, it always feels like Einstein teaching string theory to third graders. Because for most of us, it's not obvious. And when I started teaching, when I took over and I started teaching a 101 class in the afternoons, and my whole thing was to teach the remedial, the rules, the looks to brand new users, the one thing that I promised myself I would never do is tell anyone that anything was obvious. And I believe that the most effective teaching, and one of the reasons why I like doing so much, is everybody that walks into this room, I assume nothing is obvious. And everything deserves the attention, and every rule deserves the pictures and the talk and the just over and over and the repetition. Because what happens is that repetition forcing you to hear the same thing over and over, eventually it does become obvious. Eventually odds favorable momentum is obvious, and eventually termination conditions are obvious, and eventually those entries become obvious. But until they are, it's my job to keep reinforcing lessons, and eventually they get there. Odds favorable. Traded into a term was micro focus on your 13-2. Waited for clearance, got in late, fear of missing out, total miss of not looking at the 34.5 and the fibs on the 34. You had a little bit of room to get there, and you still got there. He hadn't reached it yet. And guys, this is where language, in order to have a termination condition, price reaches the area. In order for it to be a termination condition, price reaches the area. Where are my triggers? He hadn't gotten there. He was close, but he hadn't gotten there. And look at where he exited. Look at where he exited. He said, oh no, that's tight. Let me not hope it breaks. Let me get paid at the spot. And then the best entry was on the other side of that fib. Amen, Steve. I absolutely adore when you guys come to my classroom and you take good notes and you start showing me these amazing trades over and over. And guys, I really do. I go into proud papa mode. Hey, look, fake out breakout didn't work. I hope you guys managed your longs. They told you it wasn't going to happen. I hope you guys managed your longs. Guys, that wasn't a breakout. That was a potential to break out. That was them trying to get out of that range that was established. And that was the sellers going, ha ha, I tricked you. Remember when we talked about that before it actually happened? That's what happens when you become a chart reader, guys. When you start recognizing patterns, you start making educated decisions on what the potential is. And it keeps you out of a lot of trouble. Josh, your exit looks brilliant, doesn't it? And Elvis, I love that you put termination spot, because it gave me the opportunity to reinforce the rule that price reaches an area. And guys, that's what makes this class so awesome. Every time you guys say something, we go back to the rules. We go back to the basics. We go back to those simple ideas that yield huge results. So I like today. I think today was pretty outstanding. I think you guys